First off, I'd like to go ahead and welcome everybody. Many of you attended last week's webinar, and I appreciate that. And so a lot of the things you learned last week will go ahead and then feed into this week as far as the individual indicators and stuff like that. Certainly the exposure you got last week will help this week. But for those of you that didn't go ahead and attend last week, don't fear. We'll try to go ahead and keep it, simple enough and avoid complexity where not attending last week won't go ahead and hurt you, okay? Try to keep that environment going. What I'd like to do is go through a couple of slides with you here this morning to get us kicked off. And the first thing is, obviously, need to go ahead and share with you the boring stuff for many of you, I understand, but I need to go ahead and share because it is, while it may be boring, it's very important. It's important you understand futures trading, equities trading, options trading, currency trading, etc. They all have a lot of potential for rewards, but they also have large potential, risks as well. You need to be aware of those risks. You're responsible for your own trading. You guys have heard me countless times in the past go ahead and tell you, and I can't emphasize that enough, that you need to go ahead and speak to a registered financial advisor and consult your risk trading plan before you do something. I am not sitting here going ahead and soliciting you to buy or sell anything. And I want you to understand, talk to a professional, talk to a broker. Guys like in Infinity, you guys, many of you have seen in my chat room, I have my broker actually right there. He two of the people, I had a commitment from them to go ahead and have some support available for people. And so they're there to ask questions. You don't have to have an account with them. They'll be happy to go ahead and answer your questions. And so if you need financial advisor help, either go ahead and find one on your own or go ahead and talk to guys like that, and Russ Carlson and that from Infinity, who's in my chat room throughout the day, and Andy. Both those guys are great guys. So just want to make sure you keep that in mind. That there's a lot of reward, but there's a lot of risk involved, and you need to understand those. I do go ahead and, as you know, I'm going to offer up this webinar freely to each and every one of you. I would appreciate it. You guys all paid to be here, so I would appreciate it if when you go ahead and either watch the webinar or you download it to your computer or your CDs. I'm perfectly okay with you guys going and doing that. All I can ask is I'd appreciate you guys don't go ahead and share it with anybody outside of yourselves. If you do need to or want to share some of it, just send me an email. You guys all know I'm a pretty easygoing guy, so just let me know so that I don't get any nasty surprises down the road or anything. So let me know, and I'll help you out with whatever I can. Today, what I want to do is I put a survey out in the channel yesterday, asking people when it relates to stops, entries, and exits and stuff of that nature, setups. What are some of the things that you'd like to know? And what I did was I got hit with a lot of different types of questions across the board. I tried to go ahead and narrow that list of questions down. There was a lot of them. I tried to narrow them down because a lot of them were just duplicates of the same thing reworded differently. What I'd like to do is open up today and kind of go through many of those or all those different questions. Then I'd like to discuss a little bit about my scale-in strategy, or a lot about my scale-in strategy actually, and also then thoroughly discuss the infamous two-bar break strategy and variations. I've been putting YouTube videos out there, as you know, for 7-8 months, and I still see many people wondering, is that a two-bar break? Is that not a two-bar break? And this group here, of all people, I want to have, more knowledgeable on those breaks. So, and variations of the break, and that's even more important. I've mentioned in the past that there's many variations that can be traded off of, especially then using my scale-in strategy. So I want to make sure we talk about that. Then as time permits, I also want to talk about additional support and resistance trades, moving average trades, including my speed lines. I'll share with you what those are. Pivot point trades, and also another concept I want to introduce to you here called fishhook trading. So we're going to probably take a couple pauses, and like I said, my voice last week kind of gave out on me, but we're going to go ahead and we're going to keep going as long as we can here. My only commitment is that I have to be out of here around 12:30 Central Time, so 1:30 everybody else's time. But even though this is a 2-hour webinar, I'll keep going as long as I can. So, trying to give you guys everything I can back. If you have a question, go ahead and send it over to Todd and Robert if they feel it's something that needs to be to kind of stop the flow of things. We will stop the flow of things, and they'll use the judgment on whether to do that or not. And then the only other thing is, I've gotten to know most of the people that have actually joined this room today. So there's a few of you I don't, but so for those of you that I don't, just understand this here is not a contest, or a forum for an argument. And what I mean by that is, I'm going to be teaching you concepts on how I trade, actually apply my strategies, and you may or may not agree with some of those strategies. They work for me. You may have tried a similar strategy in the past, or a different tweak to a strategy, and it may not have worked for you and you don't agree with it. Just understand, that while I completely understand that you may not agree with the strategy, it's what has worked for me. And just like my charts last week, I shared my actual trading screens with you, the indicator settings, the levels, everything. I shared exactly, the real deal, kind of how I have it all laid out. This week I'm going to share strategies that I use, and they've worked for me, and so we're all here to go ahead and learn a little bit about what I do. And so just kind of keep that in mind, and have an open mind and apply whatever you learn here as you see fit. I've noticed, I think a lot of you have seen, like in the YouTube comments and stuff like that, people have gone ahead and taken my strategies and married them with theirs, and I've encouraged that the entire time. This is not one of these guru systems where you do as I say. This is what works for me. Let's see what you can find to incorporate into your trading, piggybacking off of some of the things I have to offer, and make a better fit for you, because trading is just as much psychology as it is looking at indicators or price action or anything else, because in the end, whether you pull a trigger or not is based in part on fear and greed and such. So same thing with the whole concept of the indicators and the setups and everything. It has to be something that fits your mentality, your methodology. So take the parts today that you've learned, that you'll learn along the way, and apply them as you see fit. Just want to go ahead and on the topic of indicators, I shared this last week in my indicator webinar, that indicators, I know we have a lot of new people, and then we also have seasoned people. But one thing that I noticed that a lot of the new people like to do is gravitate towards indicators. And you know what? I was the first person that did that. Being a very mathematically orientated type person, I loved looking at indicators. So I went out and I owned TradeStation and everything in the mid-90s, and I was building my own code with easy language, and subscribed to their different services, and it was all about indicators, and there was always something missing, and in the end, I feel that what was missing was, price action itself, especially in something like the S&Ps, where price action is very helpful, actually. And I'm not talking so much about like tape reading per se. I'm just talking about watching the chart form real time and watching how it's acting as it's trying to break to new lows or break to new highs, and then it pulls back real quick to a support level and then launches back off again. That's what I'm referring to with price action. I'm not encouraging anybody to go out and become a tape reader, okay, just so you understand. But I think the best combination is looking at setups around the indicators and then seeing if the price action agrees. So I just want to, in the end, say don't rely on indicators alone. The biggest problem is a lot of people want you to believe that just buy my magic indicator, give me $2,000, give me $4,000, come to my $5,000 or $10,000 seminar, I'll give you my indicator package, and you're going to go make millions. Well, as you all know, there's no inkling of any of that kind of, stuff on my website. I don't promise making millions. I don't promise losing millions. That hype and stuff like that, I think, needs to be thrown out the window. But then I also think the concept of you just needing this magic bullet indicator needs to kind of be thrown out the window as well. So it's kind of a, just a statement of a fact that I want to put out there for you. And what we're going to do now, in keeping with the agenda here, I've got these questions, and Robert or Todd, if there's something that comes up, you guys just kind of let me know. I'm just looking at my screens. I'm going to go through these different things. So give me just a minute to kind of switch gears to a different screen, everybody. Okay, hope everybody can see that. Actually, what I want to do, let's do this. Make it easier for everybody so when I'm flipping back and forth. Because in this segment here, I'm going to be flipping back and forth between my charts and the actual questions. So what I'm going to do is I'm going to go ahead and go through, like I said, this is the condensed version of the numerous questions that were asked yesterday. Some of them are questions, I think some of them might be a little more comment orientated, but we'll try to go ahead and go through all these different things, and then we'll get on to, and I'm sure many of these questions are some things that many of you have thought of or asking along the way. So I haven't really, like I said, I've spent right up till this morning, since you were still sending them till this morning, preparing them, merging them together. So I haven't really looked at them, so we're just going to take these on the fly and share my opinions with you along the way. So apart from support and resistance levels, what do you look at to determine to place a stop? Well, that's a good question.
Robert?
Let's go ahead and get up one of my primary trading screens here. You'll go ahead and notice that one of the things that I use, and let me go ahead and actually put a marker up here real quick. A couple of things that I use for determining stops are the moving averages themselves. Okay, and what I'm doing is, if, for instance, let's say I'm looking at going ahead and buying the rising 20-period moving average. Okay, we've had a decisive break to the upside. We go ahead and we have a pullback. Well, these two speed lines here, this was the speed lines I was referring to earlier. You guys learned the settings on those last week. What's happening is I'm looking then to these as either short-term or longer-term support and resistance levels. So one of the things I'm doing with the support then is, if it's broken to the downside. So if I'm looking at going long here, this then is also an area where I try to base stops off of. And what I'm really looking for is a confluence of support or resistance levels. Then I know what should be happening in the market. We talk about, I've talked about to you about the concept of, if what you expect to have happen in the market doesn't, get out. And if you're not in, look to reverse your trade. Okay, so let's think about that concept for a minute. We've got this rising 20-period moving average after breaking out. What I'm looking for is a pullback to the 20-period moving average, and I'm looking then for it to bounce off the 20-period moving average. That's what should happen. What I would not expect to have happen would be that it breaks through the 20-period moving average, and at this point, this 1241 support level. You'll actually recall I've been talking about the 1241 support level for several days, and look how well it worked actually in trading, yesterday. So I don't know if everybody caught on to that, but you see here, it hit here, broke here, pull back here, here, and here. So that 1241 was ultimately important. Well, so I'm looking for this confluence of, in this case, support. And if we break through and we close below a major support level of mine, so if this would have broken through and actually closed down in this area, and now your stops, your risk reward ratio is kind of depending on what you're looking for. Are you scalping this? Because what a great scalping opportunity generally around a lot of these moving averages. And some of you have asked about scalping strategies. So, but if you're looking for a tick or two, are you going to let this thing go against you 3 points and close all the way, down in this area down here before you exit? Probably not. But what you're going to go ahead and do, though, is have to gauge how much profit am I looking for and try to keep those proportions in whack. Now, if you're a tick trader and you're trading for 1 or 2 ticks, you can't just let it go 1 or 2 ticks beyond you on the support and get stopped out. If you have a 1-to-1 ratio there, you're likely to go ahead and get stopped out very, very frequently if you're a tick trader, and I know some of you are based on the questions that you had. So try to keep in mind, though, as we look at what other things I'm looking at other than traditional my support and resistance levels, I'm really looking for a confluence of support or resistance levels and then a break of them to the wrong side. In this case, I'm looking to go long, and then I'm looking to see if it's going to go against me and close down here. So same concept here. If this bar would have closed down here, I would have been done. If I was going long here, I did not go long here. Just so everybody knows, I'm don't mean to misrepresent that. I did not go long here yesterday, but what I'm saying, if I did go long here, we got the rising 50-period moving average, as well as right above support. So if I went long here and then all of a sudden we close through here, even though it's a 1-bar close, it's done the wrong direction. It's gone the wrong way. So a couple of things I'm looking at are moving averages, in particular the speed lines, the shorter term moving averages, and then the longer term ones. Those are a couple things I want to make sure you understand that I'm looking for, as far as where I set my stops. I usually want to be, you don't need to be too far beyond, because if the bar closes down below it, you're wrong. Your opinion was wrong at that time. If it ultimately goes back up, then you look for a reentry. In fact, there's a great setup right here, and I want to make sure I share that with you a little later. So just understand that when you have multiple areas of support, you don't need to let it go very far beyond that area of support as far as on a closing basis, because if you're right, the trade is going to work fairly quickly. As you've seen throughout our trading sessions, the 20-period moving average, for instance, gets honored very well, especially when combined with a support level. So if it breaks through and closes down in this area, something's gone wrong with the trade. News announcement, the analysis was just wrong. Sometimes the setups just don't work. More often than not, in my opinion, they do. But if it doesn't, then get out and then look to either take a trade in the opposite direction, or at least you're out and not inflicting more pain on yourself. And that's a theme I want to continue to impress on people. Okay, so let's go ahead and go back. Best trades on a risk-reward basis. Well, the highest probability trades from my perspective are when you get like the 2-bar breakout as an example, and then you go ahead and get a pullback to, in an ideal world, when you want to talk about the best trades are the ones that come all the way back to a solid support level. In this case, as we're looking to go long, a solid support level, as well as a support resistance level. So when I think about best trades, the best trades to me are where we get multiple areas of support or multiple areas of resistance. In fact, you guys will recall just the other day I did a webinar in the morning hours on Wednesday, I believe it was. It was the day my mom was in the hospital, and you recall, right in that video, I actually showed how what was making me want to look at the sell side on something like that was, and my concern was the multiple areas of resistance that were coming down on us. And sure enough, within minutes of me doing that video, as you know, we sold off pretty nicely right down to that support level. So I'm looking for confluences on multiple areas of support or multiple areas of resistance if I'm looking to go short, where we can combine a support and resistance level and a moving average. Those are the highest probabilities. Those are the best trades. Okay. Clear names for setups. Well, I have not officially named my two-bar setup strategy. If people have an idea what they'd like to name it, I would certainly be willing to go ahead and entertain naming it for people. And then the other strategy that I was going to share today, the fishhook strategy, I guess I kind of did give a name to it just because I've called it that for many years. So that one, I guess, is kind of sort of named. But if anybody wants to help me name my two-bar strategy, you're welcome to go ahead and either email me at students@powercharting.com or send the email through the note through the questions tab right here. Actually, it would probably be better because all those are archived for me and I can look at them later. And Todd can help me, and Robert can help me pick the name that fits. So do you choose your entries up to the tick precise? At times I do. But not most of the time. Let me explain my style of trading for you a little bit. Maybe that'll help. What I do, you know what? Actually, let me close something here. I kept this open in case any of you tried to contact me last minute earlier with password issues and such. My style of trading is, and you're going to see in a little bit, I trade everywhere from a couple of contracts to well over 100 contracts. Okay, and you're going to see actually even yesterday where I didn't think I was going to trade, I ended up doing some light trades, and then I ended up going ahead and I think my biggest trade of the day yesterday, you know, it was still a day where I didn't want to get too aggressive, was about 85 contracts. So, and you're going to actually see my my trading slip or whatever from that. But going back to my concept is, I prefer to identify trends and go ahead and jump on in the direction of a trend. That's my overall style. I know some people are just kind of scalpers back and forth. They'd prefer to go ahead and bounce between. Let me pull this up right here. They'd prefer to bounce between a support and resistance level and just go ahead and, you know, scalp back and forth in a channel of sorts. And you know, whereas my style is I want to jump on the trend where possible. And now yesterday was a day where I didn't think there was a trend going into the morning because of this massive blow-off. In fact, that's what led me to go ahead and put my commentary out there originally. We had this huge blow-off in pre-hours. I'm just like, you know what, that's madness. This thing is hyperextended. In fact, this looks like the oil chart if you think about it. It was going ahead and rallying up, then it kind of went parabolic, and then it went hyperparabolic. If any of you recall my oil chart that I showed you previously, not today, but in the past sessions and in my YouTube videos, that's the exact same thing we had in the you know, S&Ps yesterday. So, you know, I'm just like, you know what, there's no way I'm going to go ahead and mess with that. When we're lock limit up, people are being told they can't short certain stocks and everything else. That's like, I'll step aside. And frankly, I had a lot of you I was trying to take care of, as you know, with getting registered and everything else. So, but, you know, what I'm looking for, though, is a trend, and except when we go hyperparabolic, then I usually step away. I'm looking for more of that 45-degree angle type trend. You get a thrust, you get a pullback thrust, usually off the support. You know, this is just one example of it over the last couple of days, but it works, you know, very well time and time again. In fact, for those of you that were in my webinar last weekend, you'll recall I mentioned that the you know, a lot of these indicators, these ones you can go buy on the market, you know, if you just put yourself up a simple 20-period moving average in that, and then color the bar blue if it's above the 20-period, and color the bar red if it's below the 20-period, you'll be just as in the know, if you will, as what some of these, you know, very expensive indicator packages are out there that are offered. So, And I hope some of you guys took the time to do that and see what I was referring to. So just understand, I'm looking for a trend. And I want to kind of put that out for you. That's kind of my style. I do take very short-term trades. There's no question about it. But what I'm looking for is bigger trades where I can get bigger size on, okay? So when we come back to the question of tick precise, usually a tick doesn't matter so much to me as I'm looking for more than, I'm not trading for a tick or two. If you're trading for a tick or two, precision is key. But when you're looking for larger point, moves, or you're scaling into a move, the tick is not as important. Do you ever take entries
excuse me, Robert?
levels like trend following? Yep, actually, we just kind of answered that question. I certainly do. For each strategy,
Robert?
what's the ideal entry and exit? Well, I guess we'll kind of talk about some of those as we go along here.
Robert?
More importantly, what do you do when things don't go as planned? When to get out? What
Robert?
makes you stay in? Okay, well, let's go ahead and revisit that issue for a minute. This is important because what I find is one of the biggest concerns I have with day traders, whether it's equities or whether it's futures, is they tend to go ahead and they cut their winners short and they let their losers run. Nobody else can see each other's hands in the room here. So I tell you what, if everybody do me a favor real quick. How many of you have gone ahead and done that? You cut your winners short. Raise your hand. Only me, Todd, and Robert can see it. How many of you have gone ahead and done that where you've let your losses run, but you cut your winners short?
Robert, can you hear us?
Okay. Yeah.
Robert?
So, and frankly, we've all been there at one point or two. But for longevity, that's not the way we want to go ahead and play this game. So what we want to be doing is going ahead and saying, if what doesn't happen in the market, what I expected to have happen, doesn't happen, I need to get out. And in part, you have to sit down there with your advisor and your risk trading plan to determine, is a 1 point close below this support level where you're done? Is a 2 point close below this level where you're done? Or were you going for a 10-point move, so you're willing to ride it down to this rising support level here because you could shore up support here, go ahead and scale in a little bit more, and then as it comes back up here, exit without going and taking a lot of heat on that. So there's different styles there. Frankly, that's as I look at this right here, just so you're aware, that's probably what I would do if I were starting my purchases here. In fact, you're going to see examples of me scaling into trades. Almost all my trades, because of the size that I trade, are scale-in trades. Just so everybody understands that. I don't trade 1 contracts, 5 contracts, 10 contracts, 20 contracts. As far as the overall size that I trade a lot more than that. So consequently, I need to sometimes scale in. I like to scale in because if it moves in my direction right away, like you'll see actually a couple of my trades did, well, okay, I may only get 4 contracts off or 10 contracts off or 20 contracts off. But fine, you know what? I made money on the contracts that got in there. If it continues to go ahead and pull back a little bit, I can scale in and get more at a better price. And I'm not talking about, I want to make sure I'm clear on that. I am not talking about sticking with a loser, okay, where the indicators and everything is starting to turn against you. Let me go ahead and actually get a drawing tool. I want to be very clear on that point so nobody misunderstands that. Because I can see there's an opportunity for, disaster with that if people don't understand clearly what I'm saying. Okay, if right here the trend is up, okay, so and also the longer term moving averages are up, and we got some key support here and key support here. If it breaks through this support level here, I still have strong support a few points away, a few points from my perspective, okay? And so if I go ahead and I buy my initial buy here, and I see that the overall trend on the day in this market is up, I still have the ability to go ahead and purchase down to about this level. Now, we break this level, and it's game over. But usually what happens with the S&Ps, as you see, like right over here, and right over here, they like to go ahead. They like to have a 1-bar breakthrough, and that's why I have the 2-bar strategy. They like to have a 1-bar breakthrough sometimes of key support levels, and then what do? They turn right back around. So if you're in an uptrend, they have a 1-bar break. What does that do? It gets people faked into the downside. Oh, I got to sell. How many people have done that? I hope nobody did that, yesterday where they got caught into this uptrend here. I actually went ahead and did trade this myself, and I want to go ahead and see if I can clear the screen. Okay, I actually traded this myself, but what I did was I scaled into this. I was shorting and shorting, and what happens is with the S&P is that it goes ahead and it goes up, it goes back down, making people think, okay, now's the real move down. And so this was a good opportunity. You're going to see the actual trade I did with that, and it was a profitable trade because I started going in shorting here, and I shorted back up to this level right here, and I said, okay, if it goes past the 50-period moving average and it starts to cross into this area here, I'm done. And the reason why I was in this trade, and here's a good learning opportunity, is because you see these 2 bars right here. I've demonstrated that on a nightly basis before, how powerful of a move that can be for a person. When you get that multi-bar consolidation, such as you had right here, that usually, so if it's a down move and you get 2 bars, typically you're going to go ahead and get another move down. So I was actually expecting this to go down to start right here and then go ahead and perhaps work its way down to here and then maybe find some support. Well, what it did was it actually found it didn't even come to this level. It was a fake out, and I was participating in that as a skill and trade. I got in all the way up to about this area right here, and then it came back down, and I got out of the trade with a profit. And that's why the scale-in strategy can work as long as you know what you're doing. What you don't want to do is throw good money after bad. So there's a huge difference there. Like Enron, Enron had all the moving averages and everything was coming down on Enron. So here you are, Enron was falling back here years ago. I'm just using this as an example to illustrate a very real point. Enron was falling and then rallying back up, falling. Okay, but the trend was down. The resistance was above you. So if you were scale-in buying, you were fighting the trend. Okay, so that's what I want to go ahead and point out the difference. The reason for me for this trade, this was a rising 50-period moving average, but the trend for the last several bars had been down, and the 20-period moving average was starting to roll over. That's why I even participated in that trade to the downside, thinking that maybe we're getting some longer-term rollover potentially down to this area. And I was wrong on that, by the way, but I was still right because I made money on the trade. So. And the reason why I did that was because of that scale and strategy. That's why I very seldom ever lose, because I try to go ahead and trade enough with the trend that the scale and strategy will at least allow me to go ahead and get out with a quarter tick, a quarter point or a half point. Ideally at least a point or more. But when I'm trading the size that I trade, it's perfectly fine to do that. So keep in mind that what I'm looking for is not going and buying when the thing keeps moving against you and everything's coming down on you. You want to go ahead and be a buyer if the overall trend is up. So that's why if it fell all the way down to this level, I would have been willing to buy down to this level. And then if it broke the 50-period moving average, then I've lost kind of my final support in that trade. So just understand the difference between scaling in the direction of the trade versus going ahead and buying or adding to a loser where everything's moving against you. Huge difference there. Could everybody just raise their hand real quick and make sure that so that I make sure everybody's kind of understood that concept of buying in. Okay, good. I'm seeing the hands start to get raised there. Go ahead and keep their hand raised just a little bit longer if you would there. I see some of you are raising lower right away. It's just such an important concept of scaling in for the right reasons versus scaling in because you're just adding to a loser. That's something a lot of people did in the stock market back in the early 2000s and lost a lot of money, and I just want to make sure that people don't do that. Okay. All right, looks great. Thank you, everybody. So the next thing I want to do then is go ahead and clear the screen actually first of all. And let's go ahead and get back to the...
Robert, can you hear us?
Unmuted.
Hey, Todd, can you hear me?
Robert, we can hear you. Can you hear us?
Robert, Fletch, I'm going to go ahead and text him right now and see if he picks that up.
Can you hear me?
Yes.
Okay. It says that it said I was muted. I want to make sure you guys could hear me okay.
Yeah, can you hear us?
Okay, yep, I can. Good. Then everybody should be able to hear me then. Sorry about that.
Wait, Robert.
Robert, can you hear us?
Yeah, I can hear you.
We're trying to... You couldn't hear us before. Go ahead, Todd.
Yeah. I'm sorry, Robert. So you can hear us both now?
I can hear both of you.
Okay, good. For a while there, I think you might have had your speaker off or something muted, and because we were going to just interject with a few questions. But we're going to go ahead and hold the questions until the end, and then add them to the back end of this session here.
Okay. Well, just so I'm clear, where did you guys leave off then? Where did I leave off?
Basically, when you started the question and answer, or answering your questions here, that's when we apparently lost contact with you. So
answering the
but
question.
everybody's been able to. You've been going down your list of questions.
Yeah.
When you started doing that, that's when you were no longer able to hear Robert or I. And but it's okay. Everybody has been able to hear you the whole time.
They've been able to hear me.
Yeah. So it's been no problem. We just haven't been able to communicate, but it's fine now. So.
Okay. And if something happens, you can call me on my cell phone or something. If something like that happens, I don't want to.
I was just about ready to text you. So.
Okay.
I had muted you when you stopped there just to get your attention because nothing else seemed to work.
Okay, well, that's what I was going to say. I saw it says you are muted. That's why I actually stopped. So I just want to make sure everybody could hear me and understood what I was saying. I saw a bunch of hands get raised, so I assumed they could hear me. Sorry, everybody, about the technical glitch there, but looks like everybody was able to hear me. So, okay, so Todd, did you say there was a question, or did we want to proceed?
Nothing at this point that we will bring up because there's a lot of good questions, but there are things that you're already hitting on, and we can add them on after you go through your list if there's anything that has been unanswered.
Okay. Yeah, there's a lot to try to cover, so I'm just going to keep going through then. We'll probably have to pick up the pace a little bit, but there's a lot of things I want to get out there for people. So, okay, more importantly, okay, things don't go as planned. What makes you stay in? So we kind of talked about that. When I get out is if the trend has started to turn against me. When I stay in is when I'm willing to continue to scale in is if I'm still on the right side of the trade, the overall trend. Be it whether it's a short-term trend of an hour or so, or whether it's a longer-term trend. In this case, I took that short trade because the overall trend, if you recall, we're still below the 11,700 level on the Dow. So the overall macro trend is still down. We've had the Fed come out and buy everything, and basically, kind of turn us into a little Russia, I think. No disrespect certainly to Russians, but I mean, it's like everything seems to be becoming state-owned, with buying anything that fails, and then we've had the no shorting, in certain things, so to stop the bloodletting. But in the grand scheme of things, those stopgap measures were still below some key levels in the overall market. So you're getting a mini preview to my next upcoming video on YouTube, but you can see that the overall trend is still down. So I still continue to take shorts as a whole, where appropriate. Signs to stay in when price reaches the support and resistance level. Okay. Well, hey Todd, I think you're unmuted. Okay. So the next question I want to go ahead and ask, the answer is when to stay in as price reaches the support and resistance level. And here again, one of the things that I've advocated in the channel before is taking size off as you go ahead and get to the next levels. So if you went ahead and you broke the support level, let me get the highlighter on here for you. If you broke the resistance level here and you took the slight pullback to a speed line as your pullback, as kind of a modified trade, then you could look to take some of your initial size off here, and then you can go ahead and see if you want to let the rest, let your winner run. Now, in this case, you would have had to have taken a pullback that would have actually gotten you almost back to your entry, in fact, probably slightly below your entry. So you would have taken some heat on that. But you would have locked in some profit, and then you could have gone and said, okay, I'm willing to accept a little bit of a loss below this to give this a chance to continue the overall trend. So what I look to do is, usually if we're coming up to another support or resistance level, I'm looking to go ahead and take some profit off the table to try to lock in a gain. How much do you take off? In part, that depends on the volatility on the day. That goes ahead and it depends on your risk tolerances. If your psychology is you like to go and cut your winners short and you let your losers run, you may want to take more off the table at that initial level. So in other words, you may want to take 50% off perhaps at this level, so that you've locked in some profit and can feel good about that. And that way then you can let it pull back. Again, in this case, this pullback actually slightly below your initial entry. But you would have had the initial profit up to here, so you could have taken a little bit more heat to see if it would run. So keep that concept in mind, that as I approach a support or resistance level, even I, especially with size, because reversals happen, especially in a market like this. Again, we talked about how well the 1241 area had worked, even in all the madness the other day, the last couple of days. In fact, I think there was a question either in the channel or here earlier this morning or something. I thought there was a question to the effect of, did the levels even work, or does technical analysis even work in the madness of the last couple of days? And here you can clearly see that 1241 level, how well that worked, that support and resistance level, which is basically a technical level, not to mention like the 20-period moving average that was rising. So yeah, I submit that technical analysis still does work. If you're in a parabolic blow-off or something like that, no, rational heads are not necessarily there. But as a whole, the last several days, the market has worked very well. You'll recall, like when I did that webinar the other day, I talked about the downtrending moving average resistance and the key levels that were above us. And sure enough, in fact, let me just get to that day there, because I guess there's a lot of people that are probably in here today that weren't able to participate in the channel. What we're referring to is this day here. I did a little webinar here, and what I talked about was the downtrending 200-period moving average, the downtrending 20-period moving average, as well as key support, or excuse me, key resistance above us. This was making me very nervous that all the pressure was to the downside. And then I talked about, a move, down to another support level, because what we had the 2-bar break, but it was very sloppy. And so I pointed all this out in the webinar that I did, the little instant webinar in the chat room the other day. I think some of you that were there will recall what I'm referring to. And then sure enough, all this pressure, look at this in multiple areas. When we look at a confluence of circumstances, that's it right there. If ever you want to go ahead and do a short trade, it's when you get up to this. You talk about your highest probability trade. Your highest probability trade is when you have so many areas of support or resistance convening on one area. Okay, and so sure enough, shortly after I did that webinar, we actually went and sold down, nicely. So just kind of keep that in mind. There's a couple of nice things to know there, which is the confluence of support or the confluence of resistance, depending on which side of the market you're on. Over here is kind of the same thing. Let me move my cursor. Here, you're in an uptrending market. We pulled back to rising 20-period moving average support on the overall trend, the rising 50-period moving average, and here again, that 1202 to 1204 level. I've been speaking about it for quite some time. It's been in my levels, and you see how many times we were hitting it. We pulled back to it, then we pulled to it here. So, I'm looking for a confluence of support or resistance levels. Let me go ahead and ask questions here. So what tells me to stay in is if I'm on the right side of the trend, in closing there, if I'm on the right side of the trend, the what I want to do is go ahead and look to take some percentage off. But if my psychology is such that I'm very fragile at this time because I recently took a heavy loss, or my husband or my wife is mad at me, or the dog's about to leave me, lock in some of those profits at that next key level, and then go ahead and that way you can see if you can let your winner run. That's kind of how I do it. I look to see if the overall trend is still on my side. Do you have setups for scalping for non-trending days where you just want to make a quick buck or two? Yes, I do. In fact, actually, some of the trades you're going to go ahead and look at here in a little bit. Excuse me here. Were very short-lived trading opportunities. Let's get all the way back over here. One of the trades I took yesterday was a short. What had happened was the market had gone ahead. You're going to see this actual trade. Let's get the little marker here. We'd gone ahead and we'd hit the resistance area again, very similar to where we were when we were lock limit up in early hours. We came back to that area, tested again, and rolled over. And I noticed that the 20-period moving average was starting to roll over as well, and we had two decisive bars down, close, okay, below this moving average and this what was support level. Then I saw we had a retracement back to a declining 20-period moving average. So when this thing started to sell off, I didn't wait for any additional confirmation. I went ahead and I jumped into this trade to the sell side. Okay, so this was it was kind of a scalp trade. There are those days where we are in a support and resistance level. I'm trying to think of the day it was earlier. I believe it was early in the week. We were bouncing between support and resistance level, and as long as I have solid support and rising moving averages below me, I'll look to go ahead and take a quick scalp, and that's why I was encouraging kind of a higher probability type scalp trade. Again, is where you have the support level and the rising moving average together. Even if it's a scalp, that's a great trade. But then also, if you're a position trader, if you're on the right side of the trade, that's that can be an even more fruitful trade for you when you got the longer term moving averages and the shorter term combined with the support level. So these are huge opportunities for you. And I actually tried to go ahead and make a video. When I found the average size that people do, I actually tried to make a video for you guys yesterday using the average size, which you guys said you do, which is about 6 contracts. Some of you said you did 1 to 3. Some of you said you did 10 or more. Most of you, though, when it averaged out, were about 6 trades. So I tried to do a 6 contract trade, which you'll see on my trade statement there. But the video, because I had to move everything to Microsoft Outlook, you guys, I think many of you I'd had email problems with Gmail. Looks like some of your servers don't like emails that come from Gmail. They either put in spam or they don't accept them at all. And so I had to move all my accounts over, and I put them all in Outlook. And that kind of became kind of an intensive memory hog. So when I loaded up my screen recording software as well, it went ahead and it kind of puked everything out. So what I'll do is, knowing that now, I'm going to still try to get a couple videos recorded for you guys, probably just make them available in general terms to people like yourselves that have come to this webinar, if I do something like that. But, we'll kind of demonstrate some of those techniques, both scalping and position trading. So if and when I make those available, I'll let you guys know where we put them on the website so you can see them, okay? All right, next. I need to move this over. Okay. Entries. When is the optimal time? When is optimal time when setup is in view? When setup is complete or a few minutes before it completes its final formation? Okay, I think what was being asked there is like the 2-bar setup and the retracement. When do you actually go ahead and execute that trade? I tell you what we'll do. Related to the two-bar breakouts, questions on those to speed this up a little bit, because I know you guys got questions, so it sounds like too. Anything with the two-bar breakout, since I'm going to cover that after the questions here, I'll go ahead and I'll reserve that for after this portion. How big should your stop be as a conservative setup and an aggressive setup? Well, again, what's gonna be key there is how many points are you going for? If you're going like right here, let me get the highlighter back up here. Okay, so we've had the two-bar break here. What did it do? It moved right down to the support level. Okay, how many? But if let's say this was going up, how many points were you looking for? So this was trading at the time around the 1250, 1251 area. Where's the next support level? It was down around the 1248 level. Okay, so you're going for about 3 points. So where should your stop be? Well, it should be 3 points or less, probably for the average trader, up in right this area, which is fine because of the fact that you have a resistance level above you now and downtrending 20-period moving average support. But there's going to be other times where maybe a 5-point stop is appropriate if you're going for 5 points or more. But that's really the problem I have with that though is many traders go and make 1 point. They said they were going for 5 points. They end up getting a point in their direction, and because they've had some losers recently, they lock in that 1 point trade, but they were going for a 5-point loss potentially. You got to make sure that if you're going to go ahead and especially as a new trader. If you're a seasoned trader, you have flexibility. If you've been down these roads, you know what it's like to lose money. You've gone ahead and you're well capitalized. You can take heat. Your psychology is such as you look at this and say, you know what, I make mistakes, but I live to fight the next day. If you have a very solid trader's mindset, then you can go ahead and play with those risk reward levels a little bit. If you go ahead and are very undisciplined and you quickly take your profit, you make a tick or you make a tick or two, but then you let your losers run 3, 4, 5, 10 points, which I would hope nobody would do that, but I've heard the horror stories. So, then you need to go ahead and stick to a tighter stop discipline. And I would say use something like this as your guide. Where is the next support and resistance level? Because if it breaks back above and closes above the support or resistance, or in this case, downtrending resistance, this thing should be falling, and it did, and that's the trade will show. But if it closes back up here, then something's wrong with the trend. Now, if it just gets back up to here and then closes back down, then nothing's wrong. But if it starts closing back up here against your trade, something's definitely wrong. Okay, and real quickly, I know I'm throwing a lot at you, but that's the beauty of the video here. You can replay this over and over and over again. Then you can actually go ahead, and that's why I've opened up that extra chat room for you guys, is because then you guys can talk about this more in that chat room, and to help solidify and strengthen the concepts that you've learned here. Okay, in last week's webinar, the people that were there, they kind of set the path. They voted to have a private chat room for people to be able to talk about the indicators and settings and setups and things like that, because you guys had gone and paid to be here. So that's why we opened up that password protected second room for you guys, and that will strengthen your learning because you'll be able to openly talk amongst your peers, all the people that are here, and there's a lot of people here today. So hopefully those people will start to join that private chat room and talk about things too. And to that point, I know some of you have asked about channel logs. Robert and Todd and I are talking about how we're going to go ahead and do that as far as, like posting a channel log in some place that you guys could get access to it, because I know that some of you, or perhaps many of you, go ahead and have jobs, or you're not able to sit at the computer all day where you can participate in the channel, and if you can't log the channel from your home, we're looking at different ways or different locations where we can maybe, post the daily logs so you can go back and read it so you can still continue your learning process, because this is obviously not something you're going to learn in one webinar. Look how many things we've already been doing this for almost an hour, and I'm only just hitting the beginning of the list. There's so many things to talk about, so many things to say. So I'm trying to throw a lot of them at you as quickly as possible, so you can replay this video over and over, and then come to that chat room, or at least read the transcripts of the chat room to continue your learning. Okay, which is something that's very important to me. Going back to the questions here. Okay, the two-bar breakout, so we'll talk about those. Conservative. How do I enter once the trend is underway if I missed an entry or I want to add to a position? Okay, real quickly, great question again. What you do is, if you miss your initial entry, you should look for a pullback to a support level or a pullback to resistance level, which will give you more safety, for lack of a better word. It's not a lot of safety, obviously, in trading and investing, unless you're investing in guaranteed interest or CDs. But for what we do, it's a higher probability opportunity to add to a position or to enter a position after the initial missed move, once we pull back to a key support or resistance level. Okay. Let me keep my tab here. Let's see here. How do you decide on your exits when a next support is hit, using trailing stops, velocity, momentum? How do you decide on your exits? Sorry, guys, I didn't write these, obviously. I'm trying to interpret what people are really referring to. I think we kind of talked about, actually above, how I decide on the exits. I'll look to see if the trend is my friend still. Maybe I'll exit part of the trade, or if I feel that I've reached a comfortable zone of profit and the profit potential, I'll exit the whole trade. How do you determine the congestion zone or no trading zone, breakout zone for each prior day to start trading day? Okay, I assume what's being meant there is there are those times where I'll mention where an area is likely to be congestive. Let's see if I can quickly find an example for you here. Obviously, this is all live and real-time discussion, so you have to bear with the time it takes to go through things. Well, here's just a quick example. You see an overnight trade, and you notice I refer heavily to overnight trade, both like the next morning in my morning commentary, then at night, from the night before his video or the day after his video, and so on and so forth, because overnight trade is important, and you can kind of see where congestion zones, and just eyeballing this is here. This is about the time of the morning here, 6 o'clock, 6:30 in the morning. I'm usually starting to type out my commentary for you. Sometimes, if I got other things going on with my son or so, I don't do it. Start till 7:30 or so. But as I'm typing this, I'm going to be sitting here looking and saying, okay, this is a congestion zone. This is where the trade has been held for the evening. So what I'm going to advise you, and if you go back, I'm sure if you look at my commentary, I'm sure that's what I did that day, I would advise a breakdown, below this kind of level, or a break above this level, because the congestion zone, the trading zone, kind of defined itself. So then that tells me, okay, what we want to do is break above this level to go long, or break down below this level to go sell. And actually, I forgot to turn my little highlighter on for you guys. And you actually can see, we broke down that congestion zone, had a nice sell-off. When we rallied back and retraced all the way into it, where did it get held? The exact area here that we talked about. We didn't get the 2 consecutive bars above here, even right into the close. Of course, the closing bars, you guys know, I don't trade that time zone. That 3:45, 4 o'clock Eastern time, I'm normally saying goodnight to you guys. It's too much Las Vegas for me, especially with the size that I trade, and now maybe you guys can see a little bit more what I'm referring to at that, as I show you some of my trading trades I took yesterday and such. With size I trade, it's just not worth it trading those last couple bars. And I would encourage you to look at your risk trading plan. In review of that real quick, you guys know I typically don't like to trade before 3 a.m. Eastern time. I don't like to go ahead and trade the 7:30 news announcements. 8:30 Eastern time, 10 o'clock Eastern time news announcements, the 9:30 opening Eastern time bar. Right there, a few minutes before, a few minutes after are some no-fly zones for me. As a rule. Very seldom do I ever break that rule. So it happens, but very seldom. It's just not worth it generally. So keep that in mind. So with this bar here, I didn't even really count it because it wasn't 2 bars and it was at the end of the day. So, but you see that once we got back up here, it held very nicely. So that's how I determine a congestion zone. I kind of look at the night before it's trading, or it could be an intraday congestion zone as well. The same concept can be happening intraday. It doesn't have to be overnight, but as I'm looking into my morning commentary, that's where I'm determining those congestion zones. Or if I'm at night in my YouTube video, if I'm talking about be very careful, there could be very choppy trade between this level and this level. If you look back in the previous couple of days or so, you're likely to see a lot of trading activity between those zones, which was my cue, my tip-off that we could be in for some trouble there. Now, if you're a scalper, then that's actually a good thing, okay? Because then you can be shorting the tops and trying to buy the bottoms for quick little pops, okay? But for somebody who's looking for more of a trend trade, that would not necessarily that's who the caution goes to. I tell you what, let me go ahead and do a quick poll if I can. How many of you in here, if you'd raise your hand, actually are more, because everybody has a different style. I've kind of shared with you a little bit more about my style. How many of you, if you raise your hand, are actually like tick traders? You're trading for 1, 2, or 3 ticks on your trades. That's kind of what you do, and you do a lot of that throughout the day. Could you guys raise your hands? Okay, fair number of you there. Go ahead and keep those hands up for a minute. I see some more hands are still kind of coming up. Okay. And how many of you are actually trading more for 1 to 3 points? If you can raise your hand, how many are trading 1 to 3 points? That's where you kind of wake up each day and say, that's the kind of trade I'm going through for. Okay. And how many of you will only take a trade if you feel in your heart of hearts that you're going to go ahead and go for 5 points or more? Just trying to get a feel for the kind of traders. So just have your hand up right now if you're only going to take a trade if you think it's going to yield 5 points or more. Okay. Well, assuming all those hands are correct. So everybody that's got their hand up right now is knowingly taking a trade with the intention that they feel it's going to go 5 points or more. Okay. Well, that's a fair number of you too. Now, great, everybody. You can lower your hands. Thank you very much. What I'll say to all of you is there is no right answer on that. You can be very profitable going ahead and trading ticks if you're doing the high volume and your accuracy is high enough. If you're going for 1 to 3 points, you can clearly be very profitable. I myself, with the size I trade, 1 point, it doesn't take much to go ahead and make money, obviously. So and for you that are going for 5 points, I really commend you because you're not going to get as frequent of setups. Now, in the last week or so, it didn't take much to move the market 5 points, but on a daily average range, with the market overall market move of 10 points or so, to get 5 points eked out of that, and feeling confident that you're going to get that whole 5 points, that's a challenge. You really have to make sure all those trend indicators that I share with you, and like I shared with you last week, are really in your favor. So good for you. Appreciate you guys going to do that. You guys can lower your hands if you would please, or I can lower them for you. Okay. Tell you what. There. All right. So let's go ahead and go back to the questions here. Let's see. How do you determine where to place stops? Well, we've talked about stops. How many times should one attempt re-entry if stopped out? Okay, good. Good question. what you have to ask yourself is, are you being stubborn? Are you fighting the trend? And again, I used that Enron example earlier, where you're going ahead and basically on the wrong side of the trade. The overall trend is going down. The market's falling. You get stopped out after your buy. It rallies up a little bit. You sit there and start thinking, oh, now it's going up, and then it goes down. You get stopped out again. Then it goes back up a little bit. You buy again, think, okay, now third time's got to be the charm, and then it drops again. So you got to ask yourself, are you taking the trade for the right reason in the first place? Are you on the right side of the trade? So, and if you're not, then you shouldn't re-enter the trade, in my opinion. Um, at all if you're on the wrong side. This is where that whole, if what you expected to have happen in the market doesn't, get out, and if you're not in a trade, look to reverse it. You need to sit there and objectively say, wow, okay, well, I thought that was going up, and now I look at that thing, and what was I thinking? And that thing is clearly a short now. So then the next time it rallies back up, you don't sit there and say, oh, okay, well, it's gone back up, so now I'm going to buy it. You say, wow, look at that. All the trending is coming down on me. Okay, I'm going to take this rally, and now I'm going to start selling this. So you get on the right side of the trade. So what I would say is, if you're looking to re-enter the trade for the right reasons, there's not a problem with that. If that's one time, two times, three times, from my perspective, you got to obviously talk to your financial advisor, your risk trading plan. But from my perspective, for me, I'll re-enter a trade right away if I get, to the point where I actually would get stopped out if I can't salvage a trade with a scale in, because I know that trend is so strong. If I can't fight that trend, I want to be on that opposite side with it. Okay? Let me clear that screen off real quick. How much profit before you move your stop to break even? Oh, you know what? Can I do a quick show of hands? We've got obviously a lot of these questions, to go through. I want to make sure that these questions, you're finding some of these useful. Obviously there's a lot more of them to go. Many of them are, I think, the same questions many of you are asked. Could I just get a quick show of hands? Is this helping you going through these things and then looking at charts and talking about them? Could everybody raise their hands just so I make sure that we're helping you out there? And just go ahead and keep your hands raised if you would, please, guys. Okay. If everybody lower their hands real quick, or I'll lower them real quick. Okay. Okay, let me go ahead and keep the hands lowered for a second there. And my next question will be then with a show of hands. How many of you would just like to kind of abandon the question list and go into, just going into the two-bar setup and the other parts of the thing? I just want to go ahead and see if the, going through the questions is helping. Okay, so keep your hands raised if you want to just move into the setups and everything else, or the two-bar setup and the variations and such. Okay. I think what we're going to go ahead and do is kind of a 50-50 split. Todd, Robert?
Yeah, Robert. I think a couple comments I've gotten that your questions, going over the frequently asked questions, is very helpful, but I think they got enough right now, and maybe want to move on to the setups and then maybe catch the rest of those questions at the end of the webinar.
Okay. All right. Well, I tell you what we'll do then. Let's go ahead and take a quick break here. It's about, I'm showing 11:10 Eastern time is what I've got it at. So why don't we take a quick 5-minute break for everybody, and we'll go ahead, we'll come back, and we'll get into the two-bar setup strategy and everything. Actually, we're going to talk about my scale-in strategy and then the two-bar strategy from there. Okay? So take a break, everybody, and we'll be right back. Wow. Well, who's got the music on? Okay. Todd, was that you? Can
No,
everybody?
that's Robert. That was a special request.
That was a special request. Wow. Okay. Excellent. Okay. Well, I just want to make sure everybody's back before we get going here. Gang, can everybody raise their hand real quick if you're back? Okay, it looks like pretty much everybody's back, and the recording if they stepped away for an extra minute or two. All right, what we're going to do now is, there's a lot of questions on there, and what I'm hearing is that you guys are typing in questions, and that sounds like within a couple minutes I'm answering them through that list. That list obviously has value, which is why I kind of went through it, and tried to shake things up back and forth, try to answer some questions I know many of you have had for a very long time, and you had expressed that through your comments to me in the survey and stuff. So I was trying to get that out there for you, but I think what we'll do now is kind of switch gears back to some of the other parts, and the questions we don't get answered today, then, we'll try to make an effort maybe through the chat room or something, figure out how we can answer some of those questions for people. Some of those questions I think are just going to be answered through the course of this, but we are trying to get some of them out of the way for people. So with that being said, the next thing I want to kind of talk about is the scale-in strategy before we get to the two-bar and any other setups for that matter. And I kind of mentioned it to you earlier. The way I use the scale-in strategy, let me go ahead and give you some real examples here. Get back here to like yesterday's trade, for instance. Okay, so the way I use this strategy, let me get the highlighter on, is when I'm looking to go ahead and do a trade, whether it's two-bar setup, for instance. Like if we have the two-bar setup, one of the ways that I can use the scale-in strategy, how many times have we had a situation in the channel where we had such a strong move down that we actually, by the time we had the two consecutive bar break, we actually got to the next support level, okay? That happens. And so when that happens, then people are like, well, then now what do we do? Okay, and so one of the things I like to do when we've had a big move with the first two bars, at the open of the next bar. See, that's what you have to understand about the two-bar strategy. There's the conservative two-bar strategy, and then and that's why I'm kind of talking about these two things simultaneously. There's a conservative two-bar strategy, and then there's so many variations of the two-bar strategy that can be played with a scale-in strategy. So what we do is, in a case where we have two consecutive bars that are down significantly, what you can do is start to slowly scale in. Now, when you've got 6 contracts, which was about the average contracts to trade, what you can do is at the open of the third bar, so this is not a bar that's gone in and pulled back yet, because remember, you got to think, the crux of the two-bar strategy is actually the initial 2 breaks below a support level or above a resistance level. Okay, that's the first major key thing. You notice I focus on the bars, that I want the bars to be solid closing bars. I don't like them, such as in this case here, where they rally up above the 50% level only to fall all the way back down to the 50% level. Those are the kind of bars I don't like. So I focus heavily on that portion of the setup, because if we get 2 consecutive bars, and I know somebody in the channel had back tested this. Me, I'm not personally a big fan of back testing, because back testing, how many indicator packages have you seen out there that have been back tested or curve fitted to a particular time frame? So they yield these magnificent results, percentage wise, and they put that in their sales materials. But Gaydon, I believe it was, in our room, if I recall correctly, I hope that's the right person, had done some back testing and found that the two-bar strategy had worked out very well, far more times than not. So what I like to do, and that's been my observation over time, which is why I shared it. I feel, from my perspective, it's a more conservative setup. But what we do though is the third bar though a lot of times is the problem. It either goes ahead and well, I'm sorry, the second bar a lot of times is the problem. It either comes too far or well, sorry, there's a lot there. I'm trying to get out at the same time. There's the first two bars are an issue because of the fact that they have to meet so many requirements. They can't be more than 50% off the high. They both got to be above, in this case, like here, the resistance level. And then the third bar, ideally we like that to be on a lighter volume pullback to support, but that third bar does not cooperate a lot of times. Or by the time we get to the third bar, we've already exhausted a lot of the profit opportunity. Here's an example right here where we broke down below. It didn't go too far. The second bar didn't go all the way down to here, but when we went ahead and we didn't get a whole lot of a pullback. It only pulled back to the speed line. So what I like to do with my trades, and you'll see when I'm able to actually record a couple of videos, you'll see I don't necessarily wait because I don't, the conservative strategy, you got to keep in mind, that was for YouTube. That was something that's a higher probability trade, in my opinion, that we can put out on YouTube. And like I said, I've been doing those videos for 7 or 8 months, and people still ask questions. Now, was that 2 bars actually below the support, or was that 2 bars above the resistance? People still ask that very same question after 8 months of watching videos. So I'm certainly not going to put out the more aggressive strategies in such a public forum like that. But what I like to do with a 2-bar strategy at times is I'll start scaling in. If I feel I'm on the right side of the trend, I will go ahead and start scaling in right at the beginning of the third bar. Okay, so that's something I want to share with you, both my personal entry technique and also then as it relates to scaling in. So what happens here is this. So in a case like this, we go ahead and we get down below. We have 2 consecutive bars below now support, right? You go ahead, you get into this position right here. Let me get an arrow bar up here for you real quick. Okay. We go ahead and if you get in here with light volume, let's say 1 contract, if you're a 1 to 6 contract trader, what would happen in a case like this is as soon as you got into this trade, you went ahead and you had a very slight pullback and then it immediately dropped. Okay, so you wouldn't have gone ahead and had a full size in there, but you would have gone ahead and profited from the contract that you had in there. Okay, and that's one of those strategies. There was a time I remember within the last couple of weeks where we'd had a big move down, and I told people in the channel this would be a good, this is the kind of thing I want to discuss the scale-in strategy for, because sometimes the first 2 bars do move very far, or the third bar doesn't necessarily set up as pristinely as we would like to have happen. So what I like to do with that then is scale in with small size, and then if it continues to blast right away, in fact, we didn't get to that comment because we've stopped that part short here, but in the questions section that I was reading off earlier, one of the people said, how do you handle it when many times the third bar just goes and keeps going in the direction? Well, that does happen, especially if you found yourself on the right side of the trade. That will happen, which is why I like the scale-in strategy of going ahead and put, as soon as I get the 2 consecutive bars, putting a contract in there. And then if it rolls back up to the resistance levels, like we would hope it would on a light volume, then you add more contracts as you get up to the resistance. But at least you're participating in the move, and then you can add more in if the setup goes ahead and actually works out properly, and then it goes ahead and falls, and then you make more money on more contracts. But at least you've gone ahead, once you've gotten that first 2-bar close, you've gone ahead and begun the process of participating. And you're going to go ahead and actually see some examples of that. In fact, let's go ahead and show that right now. Some of my actual trades here. Okay. Here's, I don't know why that little arrow's there. Bear with me here. Here's some examples from yesterday, starting here. These numbers, these times, I think are, what is it, Greenwich Mean Time, so I think you got to subtract 5 hours for those you that want to marry up my time and sales and kind of see what I was doing. Okay, good learning opportunity for you. Here, I was only able to get 10 trades off. You see, I started off with a couple of singles. Now, keep in mind, originally I was not going to go ahead and trade at all yesterday, but then I saw some opportunities, and then I started out with smaller size, and as I saw some trades that looked even better, later I added more size in different positions, okay, to give you a feel for what I was doing. But here, look, I started out. Now, again, I have the ability to trade more than 100 contracts, and I'm starting off with onesies and twosies. Okay, and then as it went up and it started coming into my area of resistance, I went ahead and added more size. Then it turned right around and dropped, as you can see, 2.25 points, and I got out of that 10 contracts. Okay, then here's the next trade. I started off going ahead and shorting at 46 and a quarter, adding some more at 46 and a half, and then it turned around, dropped a point, and made this contract. This was the one right here, by the way, that I was talking about. Had you guys kind of in mind where I wanted to actually do a trade, mimicking your size and kind of demonstrating, how you can do like a 2, 2, and 2 kind of strategy. Or if you're doing 3 contracts, you can do 1, 1, and 1. There's the mix is kind of up to you. But the goal is that from my perspective, and we'll go back to the other chart in a minute, is trying to participate when you get the 2-bar setup, going ahead and is, especially depending on how much it's moved, is start to participate, whittle away at it, and go ahead and put a contract in there, depending on the size you trade. Let's say if you're a smaller contract, put one trader, put 1 contract in there. If you trade 10 contracts, maybe you put 2 contracts in there. And if it moves all of a sudden right away in your direction, 2 points or so, well, great. Well, then you made a couple $100. And you know what? Before I continue on, I want to show you guys many more of these trades. I want to do a survey again real quick, if I can. How many of you is your daily goal? And again, nobody's going to see each other's goal but me. So don't worry. And Robert and Todd, they're not going to care. But it's important to me because just like the size that you guys trade, I want to kind of custom tailor things to you guys. How many of you trade with the goal in mind to make between let's say $250 and $500 a day? If you can go ahead and raise your hands. Okay. How many of you are trading with the daily goal? This is your risk trading plan where your daily goal is set. Let me go ahead and I'll lower everybody's hands real quick. Okay. How about $500 to $1,000 a day is your daily goal? Okay. And this isn't what you would like to make, just so you understand. This is just what your goal, what your goal is. Not we all want to make $1 million a day, but I mean your realistic goal based on your risk trading plan. Okay, I'll lower those hands. And how many of you your risk trading plan calls for you to make $1,000 or more a day? Okay. Thanks for sharing, guys. I appreciate that. Well, ladies and gentlemen, to be more appropriate. So, with that being said, we'll get back to the size then that you're looking to achieve. And as you scale in, you got to keep that in mind. Then how much size you're trading. I'm speculating some of you that went ahead and had the over $1,000 mark are probably some of those same people that responded to me that you're trading more than 10 contracts or so, and so on and so forth. So the next thing I want to go and do is I want to continue on, if I may, and just kind of give you a feel again for the strategy. I'm sharing with you exactly the strategies that I use for trading, And so here was that 6 contract trade that we talked about, and then of course it dropped to here. Here, this was one of those examples where I was telling you about. I got into the trade, and what is it? 25 seconds later, the trade was over. I mean, there wasn't even a scale-in opportunity. It just went ahead and ceased and desist. Then we came in a little bit after that and found a new opportunity. And here, this was that trade I was showing you earlier, where I started going and nibbling early because I saw the potential for further move to the downside, and scaled in as it was rallying back up to the resistance. Okay, the exact same strategy I just showed you guys a little while ago in the question and answer section. Let me get this down here for you. So, and then I exited that trade, 85 contracts at 40 3/4. Okay, so the same things I was talking to you about scaling are the same things. Now here, you see, I started out with onesies based on my confidence level of that particular trade. Started 52 1/4, 53 1/4, 54 1/2, and then I went ahead and sold it off at 52 3/4. Here, 50, just got a couple off and went and sold it off. Here, it started out at 49. Bought it up to 52 where the resistance was presenting itself to me, and I ended up dumping it at 51 1/2 on 36 contracts that particular time. So it goes on and on. You see the different sizes. Like I said, I didn't want to do much yesterday. The maximum size I did yesterday was an 85 contract trade because of the volatility that we were in. Give me other days, and we'll dump certainly a lot more than that in. So. But you see how the scale and strategy, it's the same strategy. So what I'm preaching, I'm using. Okay, and that, I think if nothing else, I want you to understand that it's a viable strategy, and it's a strategy, in my opinion, it's a viable strategy. It's a strategy that I'm using, and I'm making money with it. So, Todd, are there any questions on that, or can I just keep going?
So far, it looks good. So.
Okay.
Keep going.
Okay, great. So getting back then to this concept of the scaling, whether it's the 2-bar strategy or any other setups that you may feel like when we're breaking down below here, which I believe I have to look back on the time of sales because I took so many trades as you saw yesterday, but and like right here was one of the trades in that. What I'm looking for is when I see the trend changing, and what I like to do is, and this is where price action comes in. When you see these wide range bars, whether they're up or whether they're down, I think most of you who have been around for a while have started to sense a little bit of ebb and flow with the E-minis and that. What they like to do is they'll move in a direction, they pull back sharply, they move again, pull back sharply, move again. Can I get a show of hands how many people actually have identified that and have kind of noticed that in their trading, that the E-minis thrust in a direction, then they pull back, sometimes significantly stopping people out, then they resume the trend? Go ahead and keep your hands up for me for just a moment if you would, please. Okay, good. I'm glad so many of you have noticed that. For those of you that haven't, perhaps you're newer traders or you just haven't spent a lot of time with like the E-minis, but just so you understand, thanks everybody. You can lower your hands. Appreciate it. The E-minis, when they're trending, tend to do that, and so what happens is this is a source of frustration for a lot of traders because what happens is they don't buy it as it's rallying. Let me go ahead and get this. So they're not buying it on the way up. Then they go ahead and they finally, say, wow, it's moved 3 points, 4 points in my direction. I want to go ahead and get in on this. I'm not missing this again. They buy it. Then it moves against them 2, 3 points. And then they go ahead and they get out of the trade. May go a little bit more beyond where they got out so that they feel good about themselves. And then it turns right back around and goes in their direction. Okay? Well, one of the things the whole scale-in strategy does for me then is, and that's why I emphasized so much earlier and want to make sure everybody was raising their hands, because when you're on the right side of a trend, such as here, when you're on the right side of the 20-period moving average, and I've mentioned the 20-period moving average in countless of my videos, so I hope everybody understands how important that is, and told you even a lot of black box systems revolve around it. But what I like to do with the E-minis then is I like to go and get in on that initial entry. And then as it moves up and it pulls back, add some more and add some more and until I'm comfortable and get out where I decide to go ahead and get out. And whether that's, I said in my case, it doesn't take much. If when you dump in 100 contracts in there, 1 point can be very profitable very quickly. So, but if you're a 6-contract trader, it's still the same concept. And if you're a 6-contract trader, I assume the average person here that's a 6-contract trader is looking for a $250, $500 profit a day, probably not pushing, for $1,000 plus. That's just, my assumption, unless you're like doing a lot of high volume scalping in and out perhaps or so throughout the day. But everybody's got a different style, and I would have to probably do a survey at some point to get a better feel for that. But nonetheless, so if you're doing 6 contracts at $50 a contract, 1 point is $300. So if you can go ahead and scale in a couple times a day where you're averaging out then a 1 point profit, for instance, then you can meet even that $500 target. So some of the keys I look for that again then is I'm looking to be on the right side of the trade. Okay, I'm looking then to go ahead and enter, like where did my trade go here? I'm looking to go ahead and enter, in my case, for more aggressive trades after the second bar has closed. Not necessarily waiting for some light volume pullback. That's the more conservative trade. But again, that's one trade out there for YouTube land. I can't emphasize that enough, and one for our open free channel to discuss. For those of you that are going to go ahead and that have attended this now are going to come into the the private channel, I hope that you're going to be looking for more opportunities than that one conservative trade now. Start paying more attention after today, or after this webinar. I hope that you're going to go back to your charts today and start looking at more and more trades as far as, now, how could I participate perhaps if we just get a 2-bar break at all? Okay, could I go ahead and start to slowly scale into a trade? How many contracts do I trade? Okay, now, one thing you notice, some of my when I'm actually scaling in, I want you guys to understand, how my parameters. I like to go ahead, and you saw actually on my my trading bars there, I like to, if I get in it when possible, let's say I get in at 40, and this is a short. Let's say I'm expecting this to go down, and so I buy my first set of contracts at 40. All of a sudden the market starts to go back up. I generally, unless I see, let's go move it here, let's pretend this is the resistance. If this is the resistance, I may add multiple contracts at the resistance level here, okay, which then raises your average so that when the E-mini pulls back down, you can go ahead and get out with a profit. But what we want to do is to go ahead, and I normally don't like, let's say if I buy at 40, if it moves to 40 and a quarter, and then 40 and a half, and then 40 and 3/4, I don't really like to do that unless I know that's where the resistance is at. You'll see me get heavier on my size where the resistance is at. Okay, just want to make that clear. But what I do is, as we're rising, so let's say this was meant to be a short, okay, at 40 again, and it goes up. I usually dump my next set of contracts in roughly a point above where I was with the first one. So if you're trading one contract, you get in here and it starts to go up, you're right on the overall direction now. Remember, that's a key thing. Let's say the 20-period moving average is down, but you are a little bit far away from that 20-period moving average. I wouldn't want to dump my next contract in likely until I was roughly around the 41 area, and then the next one maybe at the 42 area. Keep it in mind how far away you are from the 20-period moving average. Okay, that's key. But what happens then is, if you go ahead and you successfully short this into a resistance area, then when it starts to pull back and the trend resumes in its direction, you've gone ahead and scaled in at higher price levels. So when it resumes your direction, you're profiting more on more contracts. And like I said, I had some great examples of that. Now that I've learned my lesson with Microsoft Outlook, I want to go ahead and actually make a video of it so you can actually see this live. I mean, you got to see my my trades here. Let's go back to that, if I may, real quick. So you'll see here the fills. Look at the fills here. This was on the 85 contract one. Here, from my first contract to my second one, or my second set of 5, I should say, was well over a point and a half. Then I did go ahead and put 5 more in here. Then the next one was a point away. These two are about 3/4 of the way. Then it started moving. It started moving back like it was forming up resistance, and it kind of looked like it was doing. So I put more in there. But when I realized that wasn't the final resistance, I waited till the next price level up, and then you see it jumps from the 2.25 to the 3.25 area. So, and then from 3.25 to the 450. So what I'm trying to do is, well, this was a new trade, but you still see the same concept. It's roughly from 2.25 here where I started entering to by the time I exited the trade, I was scaling in a couple points away. So 2.25 to 3.25 to 4.5. I'm doing slightly more aggressive trading, obviously, because I've been doing this for a very long time, and frankly, I feel that I know what I'm doing. If you're newer at this, though, stick a little more to the conservative aggressive, if I can say that, if you'll allow me to, which is, consider going ahead. And again, all this is based on what you can do. You consult your risk trading plan and your financial advisor. Okay, I'm obviously not soliciting you to buy or sell, but you want to know how I do it. I'm sharing with you the ideas. So, if you're shorting at this level here, put the next contract in 1 point away. Put the next contract in 2 points away. Now, if none of your resistance levels are until 6 points away, though, then you have to ask yourself, okay, you had the 2-bar break to the downside here. All right. So then you're like, well, okay, then I'm just going to go and do, that idea of put one in here. But if you're putting it in here and you have no resistance above you, then you have to understand that maybe you don't want to go ahead and if you think the move is strong enough that's just going to keep going down, you can still throw maybe your first contract in there. But if your resistance level is not till way up here, let's say 6 points away, a hypothetical number there, I would not go ahead and if you only got 6 contracts, 6 bullets, if you will, to go ahead and fire at this, I would wait perhaps 2 points to the next contract, okay? So you enter at ground zero, which is, let's say, the 1240 level as an example, enter the next one at 1242, and 1244. So now you've only got 3 contracts in there, but you've covered all this ground. So when you get that nice significant pullback that happens frequently with the S&Ps, they like to pull back nicely and spook everybody, then you can at least get out, scratch if you're not feeling comfortable to trade, or you can go ahead, if it pulls back past your average point, get out with a profit. And frankly, everybody, that's how I can make so many trades and not go ahead and have very many losers, because I go ahead and I properly average and scale into a trade. It's a huge, huge concept that I just can't emphasize enough, because there's some key fundamentals with this, one of which is making sure you're on the right side of the trade. So I'm not talking about, and I want to make sure I'm clear on that, I'm not talking about catching a falling knife where I keep buying this thing every time this thing goes ahead and comes down when the trend is clearly down. I'm not buying against the trend, or I'm not shorting. This thing is going up strongly right now, and I'm not keeping on shorting and trying to impose my will on the market. I want to make sure everybody understands that. I'm trading in the direction of the trend as determined at that time by price action, my speed lines here, the magenta and the blue lines, and my 20-period moving average. So I'm trying to trade with that trend, okay? And if I'm on the right side of that trend, I'm willing to go ahead and scale my position. All right, even though my initial position may be a losing position, as I scale into it and we come into the resistance and then the market falls, I become a winner, just as you saw with my actual trades there yesterday. And every one of those trades was a winner. There was not a single losing closeout position. So, and those are real trades, obviously. That's my real statement, not, simulator. I do not trade out a simulator. I just like to give these disclaimers every once in a while, because I know we got newer people with us in some cases. I do not trade on a simulator. I trade with real money, my real money, and so I just want to make sure people understand that. I know some people, there's been some infamous cases of people who have gone and claimed to make lots of money, and it turned out they're trading on simulators. I think Traders International, if I recall correctly, had a situation like that, and different things like that. So I just like to reaffirm every once in a while. That's why you don't see on my website or anywhere else results are hypothetical. I'm trading with real money. So just so everybody's clear on that. So I hope everybody in closing on this, understands the scaling strategy has a few key concepts. Number one is you're trading in the direction of the trend. What are some of the keys to go ahead and look at with that? Let me clear this off. I like to go ahead and use things such as my rising 20-period moving average, let me rephrase, I won't call it rising because it could be downtrending. My 20-period moving average and my speed lines. You see how well these speed lines go ahead and work towards showing short-term support in this market, and then once they're broken, show an opportunity for a short-term sell, especially in light of the fact like when your 20 period starts to roll over too, then you have more pressure to the downside in this area. Conversely, once it came back up, all the speed lines got above the 20 period in that. We had a nice little opportunity right here, which I'm going to be showing you in future setups here in just a few minutes as well. But I want to make sure. You know what, Todd? I'd like to go ahead and actually, if I may, let me ask the audience because you guys drive this, okay? If everybody would raise their hands, please, that would allow me to take some questions real quick on the concept of scaling in. Does anybody mind if I take a couple quick questions on scaling in? Raise your hand. Raise your hand if it's okay to, I should say. Raise your hand if it's okay to take some questions real quick on scaling. Todd, Robert, can you guys eyeball that for me and tell me?
Yeah, it looks like a fair number.
Okay. Or let me ask this question, then let me lower everybody's hands. Would you rather I take all those questions at the end so we can just get through the rest of the material first? Raise your hand if you just like to hold off on the questions till the end, which is fine. I'll still try to address them for you, but raise your hand if you'd like me to hold off on everybody's questions till the end. Okay, I'm seeing a lot of hands there, Robert or Todd. What do you guys think? Hold off till the end. I want to make sure
It's kind of
it's a mixed bag. I just want to make sure.
It's kind of a split.
Yeah. Gosh, guys.
No, it's
hard.
We can't get a majority.
Yeah, I can't get a majority. I want to help everybody equally. Okay, well, here's what we'll do then. Let's go ahead and do me this favor. Write down what your questions were. Okay, write down what your questions were, and then after we get through some more of the material, we'll go ahead and we'll open it up to questions. That way you don't lose what your question was, you don't forget it. I mean, we're already almost at the 2-hour mark, and I'm going to keep going. I'm going to ask this question too. Is everybody okay with me keeping going? Raise your hands. Okay, that one finally looks pretty unanimous. All right, good, because I got a lot more to say. So, again, this is a topic which, it's complex. There's numerous hours worth of discussion on this, and I'm trying to hit some key concepts that we can start talking about in the private chat room and start enforcing or reinforcing for you guys there as well. So my hope is that what will happen is in that private chat room, you guys will start talking about the specifics like, hey, I think it's starting to come up to that speed line of Roberts, or hey, I see it's falling back to the rising 20-period moving average. Maybe this is an opportunity for a scalp. And then in the public channel, you can go ahead and maybe post your trade and just say, I'm taking a trade based on a setup or something like that, whatever. But that way, you guys are protecting the integrity of your room, because you guys paid for the information and such. But at the same time, continue to contribute to the public channel. What I don't want to have happen is this become a private channel only type event. I still want there to be a free channel for people to come, even if they haven't paid for anything. You guys all know, you can see by the size I trade and stuff, I don't need their money. So if they want to come and just have a guru-free environment, I want to continue to support that. So I hope that all of you that are in the chat room during the day, the free chat room, will continue to contribute just general thoughts and ideas to that community there, and that we just don't turn this into a private room only type chat. Okay, this is kind of my request, my hope of you, that you'll continue to help others. You know, I know you won't discuss specifics of setups and stuff like that necessarily in the free chat room, but still, it will still help the people that need help along. Okay. So with that said, let's go ahead then and write down your questions that you have about the scale-in strategy. I just want to go and reinforce those key points. You're scaling in with on the right side of the trade as determined by things such as the speed lines and the rising or falling 20-period moving average. When you have like the longer-term moving averages in your direction as well, such as the 50 or the 200, that's even better. Okay, so when you look at this, like obviously for yesterday, the safer trade on an intraday basis was more of a long side trade. However, I'm still what I'm looking at is on a long-term perspective, the overall market is down. You know, people talk about market manipulation by short sellers. Let's be honest about it. The market was grossly manipulated the last couple of days with the buyouts, with the the eliminating short selling in specific instruments and such. So there's manipulation on both sides, but overall, net, I want to make sure you guys all understand, it's still to the downside. We have not broken decisively 11,700. So if I see an intraday short opportunity that has some of my short-term setups into it, like the downtrending 20-period moving average, downtrending speed lines or so, I'm probably going to be taking a short. In fact, I will submit to you, every single one of my trades yesterday was a winner, and every single one of my trades yesterday was a short. Okay, just to put that in perspective for you. So, but I took those trades when certain requirements were met, the exact same requirements I just shared with you. Okay, now, so with two-bar strategy, focusing a little bit more on that now. There's a lot of different things to think about with the two-bar strategy. We have the two bars where we have the traditional, where these two bars are on heavier volume. Okay, the volume is rising, and then it pulls back on declining volume, and then resurges, in this case, to the upside is my example. Okay, that is the clearest cut, the driest or cleanest setup. Okay, it's a higher probability trade, which is why I shared it publicly with people, and it's great when they happen. However, we've seen in the recent past, in some cases, we have that participation, we have that setup in the market, but then we've seen plenty of them where the setups were sloppy. They were not pristine. The pullback bar turned out to be on higher volume. The two bars went ahead and thrust through and thrusted back through so far, they went ahead and hit the next level. Different variations. And so what I'd like for each of you to start thinking about a little bit, and like I said, we'll be able to talk about this in the private channel as well, is start thinking about looking at the two-bar setup more as the first two bars actually breaking through a support or resistance level, and then looking at how the scale-in strategy may be appropriate for you if you're, if you've identified the trend as being up in this case. Even though we've gone ahead and gone up significantly, we're due for a pullback, but you see that there's a lot of strength and momentum going in the uptrending direction in this case. You put your first contract in there, and then you go ahead and wait. And again, this depends how many contracts you have. If you're like me and you've got plenty of contracts to throw around all day long, then I can go ahead and put them wherever I want and keep going and scaling into that position. If you have less contracts, less bullets to go ahead and work with, then what you need to do is be more judicious, and you need to think about what I was saying earlier about things such as, let's get the two bars back on here. If it's pulling back, you bought your first contract here, maybe you don't buy your next contract until 2 points away, okay? And then the last two down the last contract at support. So you got 3 contracts in there. It pulls all the way back to like the rising 20-period moving average. Then it takes off. you've gone ahead and gotten in, let's say at an average of this price, it's gone back in the direction of your trend and you're going ahead and making money, versus what the average trader does is goes ahead and gets ambitious. They see this 2 bars, okay, and what happens is they say, oh my gosh, I've missed that trade. I'm not going to miss another bar. So what do? They put their whole trade in right here. Let's say all 6 contracts go in right here, and then all of a sudden, what does it do? It moves back down here. They get stopped out. They lose a bunch of money, and then it goes right back their direction. Okay? How many people have had that happen to them, where you didn't want to miss a move, you dumped your size in there, and then it went in, and you can be honest. Hey, we've all done it. Gosh knows I've done it in the past as well. So raise your hand real quick if you've done that, where you've taken the trade here, and you went ahead, you missed your first couple opportunities, so you finally, after the bar has moved away from you so many points, you finally dump all your size in there because you don't want to miss another bar, only to have it reverse back. You get stopped out of the trade, and then it resumes. Can I see a show of hands real quick? And nobody else can see this but me and Robert and Todd. So, like I said, don't worry about being, humiliated or anything like that. Okay, yeah, that's what I thought. Pretty much everybody, because you know what? I've done it, okay? So, and I would like to think that if I've done it, people maybe perhaps less experienced have done it as well. That's human nature. We don't want to miss that trade, okay? So what I'm trying to offer up is a new way of looking at entering a situation where you're overall right on the trend, in this case up, but you've already had a significant move. And so now you're looking at going ahead and how can you participate and not miss in case it does continue on a wild tear. At least you got a contract in there and you're starting to make some money, or contracts. Again, it depends on your size and your risk tolerance. If you only have 6 contracts, you may be okay with going ahead and saying, okay, we're 6 points away from the rising support. I'll dump 2 in here, 2 in here, and then the last 2 down here if it pulls all the way back to that level. Or, a more conservative person might say, I got 6 contracts to work with, so it's going to be 1, 2 points later 1, and 2 points later 1. I'm only going to risk 3 on this, and it's going to be at 2-point increments. I'm trying to get you to think about different ways, because I know based on the surveys I took, some of you are trading 6 contracts. Some of you are trading, that's the average. That's the average contract trade. So that's why I keep focusing on that number. But some of you are trading less, and some of you are trading many more. So you have more opportunity to go ahead and participate successfully. So does everybody understand at a basic level the overall concept? And I said, well, we'll do questions at the end on that concept. But at a high level, do you understand the concept of scaling in the direction of the trend? Could I see a quick show of hands? Good, good. Thank you. I'm glad. Now, I think there was 1 or 2 people that didn't have their hands raised. Please write down your questions and let's go ahead and get to them at the end. I want to make sure whatever part I missed or I didn't explain properly, I want to make sure I get that to you. But this is a huge concept, and I hope you can see. You saw it in my real trading, where I'm not using this concept on 1, 2, 3 contracts. You saw just on that statement there, there's over 85 contracts. Okay, and so I'm putting real money to work, real trades, okay, using these strategies. Just like I showed you my real trading charts last week. I don't know how many. I don't know how many more people are doing it like I'm doing it out there, as far as showing their real stuff and what they're using. So I hope you're all benefiting from this. In fact, let me just ask that question, if I may. The hands are easier for me to see versus the questions box. I know Todd and Robert, it's easier for them to see the questions box. But could you guys just go ahead and show of hands? Is some of this sinking in, or some of you guys seeing a little bit different way to participate in this market? Can I just see a show of hands real quick, please? Good. Okay, great. Thanks, guys. Appreciate you going and sharing your feedback there. So the next thing I want to go ahead and then do is is get you just again to continue to focus on the two-bar strategy being a little bit different now. I still like to, if the bars are, you notice I'm less conservative. I'm a little more aggressive when it comes to the third bar. If the first two bars uh, are not meeting my requirements, then I'm a little more stringent just in general. For instance, like right here, if this bar right here closes below the 50% level as it's trying to break out, and then you actually see this one did the same thing, that doesn't give me a warm fuzzy, and I don't want to go along with that. Okay, so you see, I'm a little more conservative when it comes to the actual breakout. Why? Because the S&Ps, and I've talked about this in past YouTube videos, the S&Ps are very good at getting people suckered in, and we kind of talked about that earlier. The emotions of getting a quote unquote break of support or resistance. So here was this awesome support level and resistance, depending on the side you were on. And you see, we would have this little attempt. We had the one bar break right here of 1241, but look what happened. The very next bar goes a little bit higher, and then it dies. And then sure enough, the market came down, okay? So if you didn't use the two-bar strategy and you got in right on bar number 2, you were toast, okay? That's why I still like to stick to a more conservative stance on the first 2 bars. It's the third bar where you have more flexibility and you can use that scale-in strategy. Here you see we had then after support once broken, I'm sorry, resistance once broken becomes support. So we broke this to the upside, and then we came down. Look where we came to, right back to the magic support, okay? Well, look what happened then. We had this one bar break down below only to close right back above. And again, I shorted, and I shorted successfully in here. However, my concern is how many people would have gone because of other things, not because of a 2-bar break strategy, but because of what I was telling you here, the speed lines rolling over, the 20-period moving average rolling over, and then the most important thing was this 2-bar consolidation. That's a setup right there, okay? I want you to see that, and so I'm trying to clear off the screen for you again. That itself is a setup right there. When you get a bar moving in a specific direction, then you get 2 tight bars where they open and close very tight like this, a very tight consolidation, regardless of how much wispiness is above or below. The ultimate bars were periods of indecision. That is usually indicative of another powerful move to come. So because I've seen that enough times, that's why I'm like, okay, this is likely going to be a big move. I was expecting it to actually go all the way down to this level here. It didn't quite get down to that level. So my opinion of how far down it was going to go was overall wrong. Yet, because of my scale-in strategy, I went ahead and made money on it. Okay? So just understand that you can ultimately, with that scale-in strategy, even if you're wrong, still go ahead and get yourself out with a scratch trade, just because that's the beauty of the minis, the way they ebb and flow. And they make their pullbacks, and pullbacks are very scary for many people. And so it goes ahead and gives a great opportunity if you're scaling to at least have it come back to your position and scale out of the trade at a scratch, okay, versus taking a loss. So that's why, again, I share that with you, because it's very helpful. So I wanted to just, while we're here, again, show you that that's another setup here. The way I usually will go ahead and take that trade is that I'm looking, in this case, I was looking for this thing to decisively break the 50-period moving average, and I really wanted to get through here. Well, as it was doing that, it moved so quickly that, like I said, by the time I acted, I went ahead and I actually got my first trade off at a low level, okay? Not a stellar entry. It happens. I do it too. Fortunately, not that often, but I do it. And so what we're doing then is I'm saying, okay, but am I on the right side of this trade? The speed lines were coming down. The 20-period moving average was coming down. Yeah, I was fighting a rising 50-period moving average and the new short sell rule and the 1241, but because of this 2-bar strategy, I was willing to take the risk. And I knew that based on this that after going this far down, that once it came back up, it was likely to come down around this area again, at least one more time. And that's just what the S&Ps do. And again, a number of you raised your hands earlier. You're very familiar with this whole concept of the ebbing and flowing of the price action. And that goes back to my comments that I opened up with when on the PowerPoint slide, that the indicators are important, but knowing the price action, and in this case, knowing this instrument, the S&P futures contract, and the Dow futures are very similar, a little less volatility in my opinion. They still ebb and flow back and forth, but they also respond very well to many of these types of things I'm showing you. In fact, in last week's video, I tried to explain that a little bit on like the primary pivot, how the primary pivot of the day, the Dow futures really honor as well, and it's a great opportunity for scalping in that. And we're gonna talk about that here in a few minutes. So let me go ahead and I'm going to end this portion of the scale-in strategy, the two-bar strategy, because the key thing to take away with the two-bar strategy is if the two bars are clean, regardless of the circumstance, if they've gone ahead and it met the requirements, the two consecutive up bars, entering with a contract or two contracts or so based on your risk tolerance, and if you're trading in the direction of the trend, a scale-in strategy back to the support level, can really go ahead and be a benefit to you. So let me clear the screen real quick, and then I want to get on to a couple of other strategies. Okay. The next thing I want to talk about is, since I've focused a lot on the moving averages, I want to kind of go ahead and switch gears, because in my opening slide presentation today, I talked about as the non-two-bar trade, we talked about the moving averages, and I've done a lot of that now through this process of talking about the rising or falling 20 period, the speed lines, and that. So I want to switch gears now and talk about the pivot points a little bit. And I think there was a fair number of questions in that email or that Excel spreadsheet that I was going through earlier about pivot points and that. So what I want to do is, I think, Todd, can you see this portion of my screen okay? Over here?
Yes, I can.
Okay, great. Just want to make sure that...
Yeah, you might want to use Robert, you might want to use
highlighter?
That red orb, though.
Okay.
Yeah.
What I'm looking for when it comes to pivot points, okay, pivot points are a great opportunity to go ahead and trade. And let's go ahead and expand this for a minute, okay? I think a number of you have had enough experience now watching my videos and that to see how well the pivot points can go ahead and benefit you. For those of you that weren't in my class last week, I will just do a very quick review so you know what I'm talking about here. For the pivot points, these blue lines are the daily pivot levels. So this very top one is R2, R1. This blue line is the primary pivot. Then you have S1 and S2, okay? The primary pivot of the day is really, in my opinion, the most important one. And the next one beyond that is really they're all important, but R2, which actually, ironically enough, isn't it interesting that R2 yesterday was exactly where we hit our limit. And then we go ahead and we had the one massive bar up through there, and it couldn't hold it. We rallied back up to R2, and then we failed it again, okay? So, but then support once broken, resistance once broken becomes support, and that's kind of what happened here with in Thursday night's trade. We went ahead, or Thursday afternoon's trade, we broke the resistance level 1, and then resistance level 1 became support into the morning session, okay? So, but the primary pivot is really important, and here's the key is when we're looking for a setup, when I'm looking for a setup, I'm looking for a confluence of circumstances once again. Let me get that orb on there. I'm sorry, Todd, you'll have to keep me reminded that it's a process to switch it back and forth, and I forget sometimes. Look at here. This was the primary pivot on Thursday. It also happened to be this green line is a weekly pivot, okay? The red lines are monthly pivots. The green lines are weekly pivots, and then the blue lines are daily pivots. Well, so when you start getting a confluence of pivots, look how it gets right to this. This was a primary pivot on the day, and also happened to be a weekly pivot. So look what it did. Huge resistance. Okay, I hope everybody sees that. So what is this in English? Great scalping opportunity. That's where pivots really kind of originated, was the floor traders would have these mathematical levels. They'd go into the pit the next day and have these key levels where as they would rally to them, they would short, and as they'd fall to support, they would start buying. In fact, look at how precisely we went ahead and fell to this level. People who try to rebuff or whatever the pivots and that, I guess, just haven't spent enough time in the markets or time studying these things. I bet a lot of money each day on these, the usage of tools just like this. And I assure you, I wouldn't do that if I didn't feel that they worked. Okay, so I'm giving you the real information of what I really feel works. And so I think that what you need to understand is I'm looking then on top of that for confluences of these. So when I get two or more of these support or resistance levels in the same place, for a scalper, for all of you in here that are going for those scalps, what a great opportunity, to consider a scalp based on your risk trading plan, to go ahead and look for taking what effectively amounts to then the shorting the resistance level. Okay, is in this case here, shorting the resistance, buying the support. Now in this case there was one support here. However, what you got to look at with this is that you'll see that this was that 1141 area. It's just below the 1141, but you had my massive 1141 area there, and then you had a support level 1 on top of it. So you had multiple levels of support. So as a scaling trader, you could look at maybe buying a contract if you wanted to. It is a counter trend trade. It's an aggressive trade. What's a higher probability trade, in my opinion, is if you're going to be counter trend, do it when you have as many support or resistance levels in your favor as possible. Well, so what are we looking at when we're doing that? Okay, and how do we enter that trade? Well, let me go ahead and clear off the orb here and put both screens back up. What we want to do, give me just a second to readjust the chart for you. You'll notice right here, get the orb back. So here we're coming up to the resistance level, which was resistance level 2 at the time. Then at the same time, you see it happen to go ahead and be a key level in my charts as well on the nightly levels. Okay, so these green lines here, these thick green lines, represent like key levels that I've put on my my weekly analysis. So if you can find it, in fact, I think everybody will notice that's been in the daily chat room. I try to post comments every once in a while. If you notice, I say things like, we're hitting a pivot resistance and a weekly level, or we're having a pivot resistance and moving averages. I try to note every once in a while for you guys as I see some of those things and I have time to comment on them if I'm not in my own trade and such, that we, if we're coming up to like a confluence, because that's important. And I hope that every one of you that's going to be in the private chat room on the IRC, in the S&P Trader Room, will go ahead and use that as a communication tool amongst yourselves and put that out there in the channel. Hey, you know what? We're approaching the resistance level 1 and Robert's weekly level. Okay, those kind of comments, because they can be very helpful to not just only a scalper, but also for those 1 to 3 point type traders as well. Because the S&Ps a lot of times bounce very violently, as you can see right here. We moved from the 65, 66 area all the way back down to the 55 area. So over the course of 45 minutes, you reverse to the tune of over 10 points. And you'll note this bar right here. At this resistance level, this key resistance level, this was a key reversal down. Does everybody see that? Would everybody raise their hands if they remember what my definition of a key reversal down is? Okay, I'm seeing about half, a little more than half. Okay, now more hands are coming up. And I'm sure some people have walked away from their computer using the restroom or whatever else. So I know I can't get 100% participation, but I want to ask as many people as I can. Okay, so just in brief then, since the majority of you seem to remember that, my definition of a key reversal down is when the high of the current bar is higher than the previous bar, but the close is below the close of the previous bar. That's a key reversal down. Now, a traditional key reversal down is where basically this had to be all the way up here and this had to go all the way down here. Okay, it's a very aggressive key reversal down, also known as like a bearish engulfing and stuff like that. But from my perspective, I look at key reversals both up and down if they meet this definition. So it extends beyond the previous bar from a high perspective and then closes down below it. That's a key reversal down. You actually had that then on this bar as well. After we opened up from the lockup, we went ahead from the limit, we went ahead and key reversal up all the way, or sorry, we rallied up all the way to here, and then we key reversal down, and this was a full-blown flat-out key reversal down by all definitions. But for my definition, we even had one right here. And I just want to show them the example of a key reversal up, because these are trading strategies too. You can go ahead and trade around those as a scalper. When you see we lock in a bar with a key reversal down or up, you can start throwing a contract or 2 or 3 in, depending on your risk trading plan and how much, what kind of scalping you're doing. These key reversals many times are good for, certainly at least a couple of ticks in the correct direction before. So even if this was going to rally back up ultimately, many times as a key reversals down, it has enough energy to at least go down a little bit further for the scalpers amongst us. So that's why I'm trying to get you to focus on the key reversals up and down. I'm trying to give different types of traders that we have here different levels of scalping and then longer term position type techniques. The key reversal up, we have one right here. We had the low was lower than the previous low, which was right here, but the close was above the previous close. So this close right here, and this was the close of the previous bar. So it went down further, only to close all the way back up here, key reversal up. Now you see it went ahead and ultimately rallied several points there, roughly 10 points from the close of this bar. But you see that we also had a retracement once again down here. So again, this is why the scale-in strategy can go ahead and help a person, because of the fact that, let me erase this, the bar here moved down. That's why I'm trying to highlight this for you a little bit. So if you took your first contract in here, and then you took your second one 2 points away, and then your third one down here, because remember this is that ultimate 1241 level. That's why it's so important to know these key levels like this. And I showed you how many times they tested this. So we knew this was a known level overnight. If you scaled into this, you are riding a very strong trend to the upside. It's an aggressive technique. That's why you can only imagine why I don't share it, in the YouTube channel, when a lot of people don't even get the concept of the 2-bar trade. But nonetheless, it's a very effective technique when you go ahead and monitor your risk and you go ahead and scale into that trade. And of course, then the worst that happens is that it continues to move right in your direction right away with one contract or so. But still, again, if you're a one contract trader, whether you were scalping or whether you were going to letting it run, there was still profit there. And many people that have come here over the last 8 months were losing traders, and what I mean by that, they're certainly not losers as people. They were people that either came from gurus, they were people that have just been doing this on their own, and then there's a lot of brand new people, people of all different sorts of background. And then, as you know, here today with us, actually, I see that there's a couple of financial market representatives. I didn't put the survey up like I did last time. In last week's, we had actually some financial market professionals with us, and I recognize the names of some of those same people here today. There's people that have been around in these markets for a long time that are utilizing some of these different strategies as well. So we got people of all walks of life that are coming here, and so I'm trying to share the aggressive strategies that can add to your toolbox, things for you to think about that you might not have thought about before, looking at them differently, and at the same time, trying to keep in mind then how you can use that scale-in strategy to minimize the risk if you're going to try to be more aggressive, okay? And how I personally minimize my risk when being more aggressive with the huge size that I trade. So that's kind of what I wanted to share and show there with the pivots, which is that I'm looking for this confluence of circumstances. I'm looking for multiple pivots, and that's why I like to overlay the weekly, monthly, and the daily pivots over each other, because I love when they come together, okay? And then especially when those levels come together with my key levels, my weekly key levels that I post, it's a higher probability trade from my perspective. And when you guys sometimes sit there and say, wow, boy, his levels work so great, well, these are the techniques that I'm using, and so I'm sharing these very openly with you. I'm not holding anything back, and so I would encourage you to take this video, play it over and over and over again, and go look for some of these things, and then start to find them for yourself where you can start seeing them in the middle of the day. And then I would also, again, encourage you, for those of you that can be in the real-time private chat room, start posting some of these things that you're seeing, so that everybody can learn from each other, and go ahead and enhance the learning experience as quickly as possible. So what I want to do real quick, I see it's 11:21. I want to move on to another setup of thing of mine that I like to use, and that's the fishhook strategy. Okay. And this is something I've used for years. In fact, I came across this back in the 90s, and frankly, I just really love the strategy. I've applied it to different indicators, but one of my indicators that I think that in my opinion, it seems to work the best on, or two ways that I feel it works the best, are on the line charts, on line charts, and on like the RSI. Those are two things. So for price action, it works very well on line charts, and on for an indicator, the RSI. Okay, just kind of putting that out there for you first as we go into this. And then let me go ahead and erase and get you to some examples. Actually, what we'll do is I'll convert this to a line chart for you real quick. All right. What I call the fishhook strategy, and I'll show you some other examples on some other charts as well, is, sorry, this marker always throws me for a loop. What I'm looking for is a market that's moved up and then has this sharp little hook back. Just years ago, my son's a little avid fisherman, so I started calling it the fish hook. So I guess for the person that was looking for me to name my strategies, this one would be the fish hook. And what we're looking for, it shows up very well when you're looking at a line chart. You can start to see some of this. This is a variation of the fish hook. It's a kind of a limp over. I had another name many years ago for it, but it was kind of inappropriate, so I won't share that one with you. But we'll call this a fish hook too. So either a fish hook that's kind of up, over, and down like this, or that's up like this and straight back like this. Okay, for a long side trade, that is. All right, those are two. And what I like to do is look at them, and you can see now. If you just eyeball that, look at what happens. Here's a downside version of it, okay? We've got different versions, and then here's the rollover one to the downside. So just on this chart alone, we see, some good examples, even from like yesterday's trade, okay? And then the RSI, you can see examples of it too. You notice how actually sometimes the signals will show up slightly better on the price action chart, which is why I use the line chart, and then sometimes it will show up better on the RSI chart. So I like to have the agreement of both of them, and so what I like to do then with this, let me flip back to because this is good. I want to make sure everybody sees this first. Does everybody understand real quick? Just get a show of hands what I'm drawing here, why I'm drawing that. It's because price action has rolled over for a bar, it's consolidated, and it's getting ready to thrust again. And then like here, we're having a short-term pullback. It had a 1-bar retracement, okay, and that creates the hook, and then it resumes the trend. So I just want to make sure everybody understands that's what I'm basically drawing here. I'm drawing a pullback. Remember, the S&Ps pull back. And again, this is a 15-minute chart we're looking at. Let's go ahead and, for you short-term traders, let's go ahead and just look at this from a 5-minute chart perspective. As you know, I prefer the 15-minute charts for a lot of reasons, the size I trade and everything else. But even on the 5-minute charts, you do go ahead and see your opportunities here for trading here. There's the rollover, you know, the different types of patterns, that kind of crooked finger, what I call again the fish hook, and then you see the you know, how it works. Most of the time, the RSI picks it up as well, but I've just found the two of them together. I get a better feel, and I feel more substantiated when I see it both in the RSI and the price action. Okay, what I do with this, there's one really great setup with this in particular, and let me get specific, and let me go ahead and get us back to the 15-minute charts and the candlestick. What I really like, and now you'll see the RSI, okay, is, let's highlight this. Here's my hook, right? Here's the candle. See, so the bar was up. We went ahead. They had a 1-bar pullback. What I like to do, okay, and this is a really specific trade that I want to make sure that people know about. What happens is on the next bar, so you had the pullback bar, the best trade comes when you go ahead and you fall back further after the pullback bar. So it continues to go down. What is that doing? Trapping new shorts in there, getting people to sell their positions. And then all of a sudden, by the end of the bar, it goes ahead and rallies back up, okay, just as it did right here. Very, very specific. So you get the fish hook, and then you get this next bar to go ahead and fake out to the downside first, okay, trapping people on the wrong side of the trade, and then going in and closing up. I like to go long, in this case, on the close of that bar, okay? Whatever size you know, you feel comfortable with, whether it be one contract or whatever contracts you trade based on your strategy. So, because what's happening is here, you had a consolidation. It holds its ground. In fact, you see two fish hooks here. You see one here, and then you see this one. Well, where do those combine with? Here, here, and here. Look how well those fish hooks work, guys. Okay, is everybody seeing them? Everybody seeing the fish hook and then the price action? Raise your hand for me real quick, please. Good. Good. Okay. I'm telling you, if you do nothing else, you wanted to learn a new setup today, if you do nothing else from this whole webinar, okay, learn these fish hooks. All right, this here, you know, you wanted something new, you wanted something special, you want something I use. Here it is. These fish hooks are awesome trading opportunities, in my opinion, and so just, you know, keep that in mind. And I'm going to go ahead and I want to show another example. You know, I'm on the wrong chart here. Give me just a second here. Well, the fish hooks were everywhere, but there was another specific trade around the fish hooks that I wanted to demonstrate for you. But let's just go ahead. Since I moved the chart, you know what? We're just going to move back like a couple days. Okay, let's go somewhere we haven't even explored the chart yet. Right here. Here's that awesome trade once again that I showed you just a minute ago. So let's go ahead, expand this. I don't expect everybody to see the fish hook right away, but here it is. Okay, here's a fish hook right there. All right, there's actually several fish hooks in here. Okay, but what I want to show you is here again. Here's that super trade I was telling you about. You get the big thrust up, and now remember, this is not the chart. This is back on 9/11 now. This is not the chart I showed you just a minute ago. You get the big thrust up in this case. You get a pullback bar, makes our fish hook. Okay, but then what it does is it starts to fake out to the downside, turns around, closes to the top of the bar, bam, you're off to the races big time on the next bar. That was over a 5-point move right there on one 15-minute bar off of this fish hook, okay? So that's just an example of what I wanted to go ahead and show you with this. Let me go ahead and see if I can. There we go. Here's the fish hook I just highlighted a second ago, and look at sure enough above. Look, the market was coming down. We had the fish hook, and look what it did. Came right down, moved down over 5 points again. Okay, you guys wanted a special setup today. You want something new that you can go look at. Take a line chart. Take a 15-minute bar line chart of the S&P 500 or another instrument that you trade. Take a 21-period RSI like I have here. It's a 21-period standard RSI. You guys know I don't use proprietary indicators. Take those two and go for the rest of the day looking at fish hooks. Okay, it is right up there. It's in some ways it's even better than the 2-bar setup, just because it happens more frequently. Okay, but in the public free YouTube stuff, I mean, I'm not going to give everything away. You guys have paid for this, so you're going to get the real deal. Use these fish hooks and spend as much time as you can this afternoon looking up, so that come Monday you can start identifying these quickly, and then come into the private channel and start talking about them. Is this a fish hook? Or hey, you know what? Looks like we just locked in a fish hook. Help each other out, because there's plenty of profit opportunity for every single person in here. We got a lot of people in here, but you know what? There's plenty of people that can go ahead, and every one of you can participate in a market that's moving 5 points and not hurt each other, and still benefit from this setup. So, I mean, I've been doing this for many, many years. You see the size that I trade, and I'm not worried about giving you guys my real stuff, because the markets are liquid enough that it's not going to go ahead and affect us. These few trades. I mean, look at some of the bars that we've traded on the S&P. On a 15-minute bar. Look at that. You're talking 200,000 contracts in a bar. Okay, so. My 100 contracts, my 200 contracts, etc., are not going to stop the world. Your 5, 6, 7 contracts are not going to stop the world. So there you have it. It's an awesome, awesome setup, and I kind of want to go ahead and close with that, because I see it's already 11:30, and I want to give you guys a chance to talk about maybe that setup. Ask more questions about it if you need to or want to, but I hope I made that very clear. It's a very simple, straightforward, in my opinion, setup, and then you combine that with the scale-in strategy, it can be a very powerful tool. So with that said, Robert, Todd, what I'd like to do, sounds like there were some questions that were asked earlier. I want to go ahead and help people and give them a chance to ask some of those questions. If you can kind of just, I'm sure you've had a chance to put some of the thoughts together in your head, since some of the same questions were asked over and over again, it sounds like. Could you go ahead and maybe tell me a little bit, or ask a couple of the questions, or thoughts?
Okay. What I've been telling people during the seminar is to just hold questions, either write them down, because we were just getting inundated with a bunch of questions, and I do have some ideas for next time that'll probably be a little more efficient. But so I'm asking people to retype questions that did not get answered during the course of the seminar so far, and we'll address them, because I have been watching everyone's questions, and I have been noting them down, so we'll kind of go through the most frequently asked ones of the questions and start with that.
I mean, there's so many things to discuss that I've probably missed some things, and I mean, let's be honest.
Yeah, Robert,
these are I mean, I could make a whole week of course out of this. You know what I'm saying? And I could charge people tens of thousands of dollars. I mean, how many people out there are charging to give away a fraction of these kind of setups? They're just basically glazed days and amazing people out there for 2, 3, 4 day courses for several $1,000s, and they don't get to the heart of some of these things. So I try to cover a lot of stuff in a very short amount of time, and if I miss something, I try to pick it up here if I can.
Okay.
I certainly didn't miss anything intentionally. It's just that there's, 15 years worth of things, and there's a lot to talk about. So I apologize if I missed something. That's why we'll ask the questions now.
Okay, we do have a couple fish hook questions, so we might as well take those right now. Does the fish hook work better with longer term periods? And he had a 15-minute chart. It has a question mark. Than maybe the 2 or 5 minute charts.
From my perspective, here, let me go ahead and actually pull up the chart and let you guys go and answer it here. I'll pull up a 3-minute chart for you, okay? Because I do look at the lower time frames, okay? I don't mean to eliminate them. And the thing is, the fish hook does work, okay? So, right off the bat, I'll go ahead and here's one. I mean, I can just kind of spot them. Obviously over the years, you can kind of spot some of the trades and everything. I mean, there's several of them buried in here if you look. But just remember though, you're gonna be if you're doing a fish hook on a 3-minute chart, it's gonna be more of a micro move. So if you are in fact don't use a fish hook on a 3-minute chart if you're looking for a 5-point move. I guess is what I would say. You use a fish hook on a 2 or 3-minute chart if you're looking for a half point, a smaller amount, it's more of a scalping technique, okay? But they do work.
And
They're there.
oh,
Sorry, go ahead.
I'm sorry, Robert.
No.
I do have a couple people asking. Basically, can you reiterate what exactly a fish hook is and when to enter the trade?
Okay, yeah, absolutely. The fish hook itself then is, and so right now I'll go ahead and I'll keep the price up in the candlestick format. In fact, let me expand the bar here for you because these are important. I mean, believe me, this fish hook. I mean, I know people probably want to talk about 1,000,010 things, but I'm telling you, I've just given you a really great technique from my perspective. So go ahead and ask away on it. What I wanted to show you was the fish hook here. Like here's this one example I'm honing in on. Again, this is a smaller time frame, but what I'm looking for here is I'm looking for a bar to come down, okay, in this case, since this is a price action, and then hook, okay, and then it closes with a small hook. I don't like this, and that's why it's a great question that was asked. I don't like it to come down and then go up like this, okay? That is not a fish hook. What I'm looking for is, you see this little hockey stick, if you will, to give it a different name. I like that. I don't like, though, where the bar comes down and then the next bar closes up, really anywhere near the top end of the previous bar's length. So what that means in English is I really don't want that fish hook to be closing up here. That's just too high. That means there's a little bit too much strength. For instance, right here, this is what I don't really like this. It worked out. I acknowledge that it worked out, but I'm telling you from my experience that a fish hook that comes up, so much like this has an equal possibility of going ahead and starting the reversal. In fact, you see we weren't far than away from a short-term reversal that was higher than the previous bar that caused the fish hook. So I like to have the more little, for lack of a better word, off the cuff here, cute one where it's down and has a smaller hockey stick versus the big hockey stick. So that's what really qualifies as a hockey stick. You see them, again, even more pronounced in the larger time frame charts. See, so we have here, we have the nice upstick and a little hockey stick there, okay? Here, it's down, and then we have a little hockey stick here. Right here, it was up, and then we have a little hockey stick, okay? Now, the other version of that trade, don't forget, is the kind of the rollover, the crooked finger kind of look there, which is this one right here, where the fish hook takes one extra bar to develop. So it kind of comes down, rolls over a little bit, comes up a little bit right there, so kind of a crooked finger, and then goes. Okay, and that's actually a very powerful one, generally speaking. Now, this happened in the middle of the night when that particular fish hook happened. Let's see how much that was worth. that crooked finger right there was still, as it formed, you know what, it was actually worth but 3 points, which for overnight trading is not bad. I mean, compared to some of the other bars that were here, it's not great, but it was still nonetheless, for you scalpers or for a 1 point type trader, you're happy as a lark. Okay. So but that's what forms a crooked finger, a elongated fish hook, is just because it's taking an extra bar to form it. Okay. That's what creates the extra little link in there, okay? But nonetheless, it doesn't mean it's any less effective. If this crooked finger would have happened in the middle of the day, it could have been worth maybe 5 points or so. So here now we've got a crooked finger. Let me just grab this highlighter right here. And you see this was actually in overnight trade, and this was at 12.17, and that bar closed at 12.23, it looks like, approximately. So that one moved over 5 points. So don't discount the crooked finger just because it takes an extra bar to form. Those fish hooks are very useful tools. So there's two versions in closing on that. There's the nice one, the clean one, like that. And then there's the one that comes down, kind of takes an extra bar, and then closes like that there, okay? And then it moves down, all right? Just as this one moves down. That's the two. So, if you have to pause this part of the video, let me just draw it to the upside too. So there's an upside crooked finger, or fish hook, sorry, and then a rollover, pull back like that, and then it's off to the races there. Stop this page right here when you get to this in the video. Look at this, write them down, draw them on a piece of paper yourself so you kind of get this mind and muscle memory, and then go ahead and go back in these charts and look for these patterns yourself, and you'll see them. And then come to that real-time channel, that private channel in the middle of the day, and then say, hey, I think this is the crooked finger. I think this is, I'm calling it crooked finger just because it kind of looks like a knuckle rolled over. But I've always called these both the fish hook because it was just me personally use them. I knew what I meant. But for you guys, if it helps to call this a crooked finger and this one the fish hook, more power to you. Either way, nonetheless, you see the result, the outcome of them can be very positive for you. Another question there, Robert or Todd?
As far as the fish hook, we do have a couple more things that have been asked a few times. One is,
Sure.
Do you consider volume with the fish hook? And secondly, how easy in your experience is it to identify a fish hook in live trading?
Oh, definitely. In my opinion, identifying the fish hook in live trading, all things being equal, is probably easier to identify than many of the other types of setups that are available to traders out there. Because when you see that little hockey stick and all of a sudden the bar closes like this, you see it. So what you could do, and then if you're having a question or you're having trouble with that, come to the chat room. And I understand that some people can't come to the channel. Okay, so let me back up for a minute. That's why we're going to work with Robert and Todd and figure out how we can get a channel log, because then you can go back through the day, look and listen, and you can look at the transcription and look and see where people were going ahead and asking about the crooked finger or the fish hook. Let me show you guys something real quick, if I may. Todd, can I break off from this for a second? I want to show something that I think will be very interesting for people.
Sure. We do have a few more fish hook questions, but we can definitely get back
This is fish hook related, so that's good.
Okay.
I want to show everybody something here. Look at how this right here is the 3 index. This is a daily chart. Okay, daily charts. There's been more than one time, guys, that on my YouTube videos when I called the market to be down the next day or I called it to be up the next day, I did that exclusively from a fish hook because, other than that, it was very difficult to determine which way the market was going. I mean, you can see fish hooks kind of, throughout this chart. I mean, I'm just kind of like eyeballing here. These charts, just so you know, this is the S&P E-mini, the S&P cash, and the NASDAQ composite, just so you see. Now, this fish hook here is suspect. It worked, but I don't like to see them again. This is just my rule, being conservative, and maybe I'm being too conservative because this is other people, and so maybe I shouldn't be. Maybe I should just let loose and just tell you exactly how I do it. But this right here, I don't like when it gets so high because you have a higher possibility of it stopping then right here and becoming almost like a little W pattern and then going higher. So like here, it could have then stopped right here and taken off to the races. Whereas when it's a little more shallow, it has a higher success rate. So, here you got the fish hooks. Take a line chart. Just make a line chart. In fact, here's like the W pattern I was saying could kind of transpire from something like this. So the W could stop here and take off, just like it did here, okay? Like it hit the opposite of the W pattern is the M pattern, but they're nonetheless effective. Here you see the crooked finger. Here you see the crooked finger, okay? I'm just spotting a couple over here, but when you're looking for these, when you're intentionally looking for them in the middle of the trading day, this is a daily chart, so you have all the time in the world all night long to look at them, but when you're looking for these in the middle of the day, knowingly and intentionally, and you get a bunch of other eyeballs with you looking for them in a chat room, which is why I opened that chat room up, those signals are going to become that much clearer to you. I don't know if anybody, already just happened to eyeball this one right here. That's the traditional fish hook, Here is the fish hook again in traditional, or the crooked finger, if you will. Since people want me to give names to these things, I guess I'll start naming these things officially. They're there. They're abundant. There's more signals, or there's frequent signals on this, far more frequent than the two-bar break conservative setup where you get pristinely two higher bars on volume, and then you get a pullback on light volume to a rising support. These crooked fingers and these fish hooks are going to happen more often than that pristine setup, okay? So I just want to share this with you. Go back. You can look at this chart, in your leisure and see what I'm talking about. Go back. I suggest, take all my scratches off here and then go back and see if you can identify them yourself. Look at a 15-minute chart. I know some of you guys are shorter-term traders, but maybe start with a 15-minute chart. Didn't mean to do that. Start with a 15-minute chart and go ahead and work your way down to the time frames as you develop your skill to bring it down to the lower time frames. Okay, start a little higher, because since it can be a little more challenging to spot at the 3-minute level as we saw. It's still very effective, but it takes a little bit of focus. Start with a 15-minute and work your way down. That would be my suggestion. Now, Todd, you had more questions about the fish hook? Yeah, that's great. I'm glad people got questions about it because I can't emphasize enough. I know I sound like a broken record, but guys, I just gave you, one of my secrets away. So.
And boy, you're getting a lot of questions about this fish hook, so it's a good topic. One question that has come up several times now is, at what point do you consider getting into a trade after you see the fish hook?
Okay, great point. There's two ways to go ahead and do this. There's the conservative way and there's the aggressive way. And the reason why I say that is because you can wait for the fake out, which could lead to higher yield results. Okay, let me get back to the fake out here. This is the fake out right here. I mean, look, I hope everybody now is suddenly seeing this like, oh yeah, I see that fish hook better now. And here's kind of your crooked finger, and so on and so forth. Here's a crooked finger, and I hope now all of a sudden somebody's, people are starting to see that a little better. Just people miss this, and I've never seen anybody ever demonstrate this before. So, I hope that I'm giving you guys something that's very novel. Certainly it's something that is very useful to me. With that said, the conservative entry then is wait till this bar closes, the third bar closes after the fish hook, after a fake out. okay, that usually is your highest probability, biggest gain type trade, in my opinion, okay? Because what's happened is you had the fish hook like you were supposed to, but it didn't just take off to the races, okay? Which is actually exactly what it did in the very next bar. Let me show you that. I think I'll stick with the arrows so I don't mark up the thing, or the thing here. Okay, so here's the broken arrow, or the fish hook. Then the goes ahead and we have the pullback. We have a fake out to the downside here to close at the high. Again, I find that's because whenever people get faked out to the wrong side, you see the powerful moves in the counter direction. For instance, look how, remember all the people that got faked out right at the open here the other day when it rallied up there just insanely after the lock limit. Oh, and look what happened. After that happened, it turned around, it came back down, and it led to a nice, powerful move, one of which that I had a nice short in. So this bar here. And so my point being that when people get faked in to the wrong side before the real move presents itself, it leads to that much more drama and that much more excitement when you're on the right side. So here you're sitting there, you wait for this thing to come back, you enter at the close of this bar right here, bar number 3, you enter at the close of that bar, okay? So that's your entry. Now, your stop, what I would recommend you do with your stop is go ahead then and convert yourself back to my other chart. And again, those of you that looked at my what levels, first I just remind you that in the middle of the day, the way my screen is actually laid out is this, okay? This is right here, and then I have this right next to it so I can see my key support and resistance levels. So here you are on this bar. I would be looking to go ahead, especially if I'm trading a lot of size, I'd be looking to start scaling out of this trade right away as we get up into this, because you've already gone and obtained a profit of several points. I mean, this is roughly 4 or 5 points from down in this area up to here. So even if you scaled out 50% of your trade to see, okay, are they going to continue to get, taken advantage of? I don't want to be offensive with my language, but if people get, on the wrong side of this trade, you could see if your window will run, and then if all of a sudden we pull back to the rising 20-period moving average, you can exit the rest of the trade and still all of it be for 100% profit. Or if it turns all the way back down, you've exited 50% up here, you break even on the rest of the trade, you've still gone and made money, yet given your winners an opportunity to run, okay? But this is my favorite version of the fish hook, is to go ahead and have a fake out on the third bar first, a close back above the previous bar, and also, let's not forget, this was a key reversal up, too. We don't want to, forget that. Let me get back to my bar here. Expand that. Remember, this is my key reversal up on top of it. So people got taken advantage of. They got caught on the wrong side of the trade, and it was a key reversal up signal. It was like all systems go, okay, from a long side perspective. My bias, I personally stuck with short side trades only. Fish hooks to the downside, and price action trades to the downside. That's all I did yesterday in the interest of full disclosure. However, these long side trades, there will be a time and a place again where I will go ahead and take the long side trades as much or more than I take the short side trades, once my bias shifts. But nonetheless, you see, even in a overall bear market, the fish hook worked very well. So enter on the close of this bar is the most conservative, highest yielding after a fake out type trade. The other way you can do this, okay, is that you go ahead, here's your other fish hook. See the fish hook there now? You enter at the close of the fish hook bar, okay? That's the other way to go ahead and do this. It is higher risk. If you do that, then my suggestion is that, or what I would do if I enter on the close of this bar is I scale in. So that way, if it does pull back down to here, I can just buy more as it does the pullback if it's a bona fide fish hook. Okay, if it pulls back to the support levels, I can go ahead and buy more, and as it rallies back up, then I can go ahead and scale out if that's what I need to do to go ahead and break, to make money on the trade. So, but you see, if you wait for the ones where you get the fake out and then the close back above, and I showed you that just, on another chart there, or excuse me, another day. I think I just scrolled back to a random day, which I think, well, there it is, 9/11. So here's 9/11, just picking one out of the box here again. It was a key reversal up. It was the hook. It faked out first, closed up. You enter long on the close of that trade. Okay. I hope I took enough time to explain that. Todd?
Robert?
Yes.
One other common question here is there a difference between the fish hook on the RSI versus the price, meaning is one stronger than the other in indicating movement?
You know what? My recommendation is stick with price first. As you guys saw in my opening slide, price rules. So I would stick with price over RSI. I just find this is a personal preference. In theory, you could take the RSI one completely off. But you know what else? See, what you got to understand is, for those of you that were in my indicator, seminar last week, you'll recall I'm learning two things about this. I'm going ahead and seeing a setup here with a hook, on the price action, but I'm also seeing that the hook is happening above my magic 50% level. And you recall from last week's video that I go ahead and I focus on, like long side trades more so above the 50% level, and sell side trades as we're getting ready to fall back through the 50% level. So having the RSI up there helps me see that extra, indication that I shared with you guys last week. Todd?
Yes.
So in closing on that, price action rules. So that would be the primary thing. But I like the RSI because of the fact that it gives me more information about relative strength above or below the 50% line, which is very important to me.
Basically supports your price action movements.
Exactly.
Okay. That's pretty much it for the fish hook questions. I mean, there's a couple individual questions which I think we may hold till the end because there's so many questions. I think if you want to continue with the presentation on any further strategies, or
well, this was the big one that I wanted to share.
Okay.
First of all, if we've talked about the 2-bar breakout, we've talked about now giving you different ways to play that much more aggressively going forward. And that's exactly what I talked to you about in the channel when you guys were like, oh well, this one, it's done, the move is over, how do we participate now? I said, hey, there are different ways that we can participate in this and be more aggressive, and that's why I shared those hours ago on this. I think we're at about 3-hour mark now. I shared a couple hours ago about the entering after the close of the second bar if you got the 2 bars in place, and then scaling into that trade. So we talked about the aggressive ways to go ahead and participate with the 3rd bar on the 2-bar setup. With support resistance levels trending in your favor. That's huge. Then we went ahead and we talked about the pivot point trades and the confluence of the pivot points and the support and resistance levels all kind of converging on each other for counter trend type trades. Great areas for you to scalp short or scalp long as you're approaching those levels. For the scalping type traders, the short term, half point, quarter point, 3/4 point, 1 point type traders amongst us, because typically once we get to those levels where you have that confluence, the market usually pulls away from it at least more than a point. So there's that opportunity for the scalpers, and so we kind of focus on the support resistance levels. Not to mention, if you're in a trade, and you're going ahead, we wanted to reaffirm that if, let's say, this is the primary pivot and a weekly pivot and my support resistance level, yet you're long from this fish hook here, you might want to seriously think about going and taking at least 50% of your trade off here, and then you can see if it will run, which, yeah, it did in this case, but it won't always, I assure you. So you take 50% off here, and then if it comes down to your entry point, you exit the rest of the trade. I do not like turning winners into losers, okay? So you're going to find me talk about, when we talk about stops, we talk about exit strategies, what I like to do is get the profit rolling and move my stop up to break even for the remainder as quickly as possible. Even if that's a couple, if that's a point or two into the trade. Okay, so you go ahead, you've gone ahead and you've made money on your winner here, and then it goes ahead, you take a little bit off the table, and it comes back to zero. What's the worst that happens? You sit there and you say, darn it, I could have made more money if I went ahead and I stayed in this. Versus you're up a point or two, and then you go ahead and decide, as I talk about all the time, bears make money, bulls make money, pigs get slaughtered, don't be a pig. You decide to be a pig and go for that extra half point, that extra full point, and the thing turns around, goes right back through your entry price, and next thing you know, it rolls over, dies, you lose several points on your trade. I do not like turning winners into losers, okay? And I can't emphasize that enough. So my strategy for people is, as soon as you've gone ahead and made some profit in a trade, take some of it off the table. The Infinity platform that I go ahead and I use it's a great tool. This is not an Infinity presentation, so I'm not going to go ahead and pull that out right now and show you how to set all that up and everything. That's not so that's not what today's for. But suffice to say, I use that platform for a reason. It's not only fast, but it gives me the ability to scale in and scale out of trades very effectively and trailing stops and such. So what I encourage everybody here to think about is, don't let your winners turn into losers. The way I would typically play what I consider to be a conservative aggressive strategy is, when you take your trade, you get up to a support or resistance level, in this case a resistance level, and if it's got multiple layers of resistance there, take half your trade off, move your stop up then to your initial entry point, so that if it comes back, takes you out of the rest, you've made money on 50% of your trade and you didn't lose anything. I mean, as a trader, isn't that way better than losing? And I submit to you, it is. Making small, consistent gains is much better than making one winner one time, not following the plan, and then turning, and then losing several times over. And let's be honest, there's more than a few of you in this room today, which I'm glad you're here, and I'm certainly in no way picking on you. That's why I'm not naming names. That I appreciate you sharing me your stories, but there's more than a few of you in here that have shared some of your personal stories with me on how that has exactly happened. You were up so much, or you were feeling so high on the day that you went ahead and you went big. You made several small gains. You went big on your last one, and you lost. Well, or you went ahead and you got into a trade, you were making money, and then it turned around because you'd done so well earlier in the day, you just let it continue to run, turns around, goes against you, and you thought then, since you were so smart earlier in the day, that it was going to come back your way later in the day, or later in that trade, and it never does, and you gave up all your gains for the day. So I can't emphasize enough, and I know I'm saying it over and over and over again, but it's because it's so important. Money management, trade management. I've talked about some of those concepts. I could spend a whole webinar just on that. And to that point, I know a number of you are in the next two open sessions. I got the beginner intermediate session and the intermediate advanced session. That's going to be basically, I will come prepared with a couple of key things that I want to emphasize and show you guys. But again, that's an open session for that whole session to be just what we're doing now, answering your questions the whole time through. Now, I'm not going to come with a prepared list of questions. You're going to go ahead and ask the questions that you want to ask in those sessions. So just so you get a flavor for what that is. But so if it's money management you want to talk about, psychology, those are huge pieces to this. Yeah, I can give you these great setups and give you the fish hooks, but you got to go ahead then and be able to manage them, effectively from there. So that's why I'm trying to get you to think about some of these critical pieces, which is, price management and strategy management, and when to know when to take, half your trade off, or a quarter of your trade, or 3/4 of your trade, and just let the rest of it run, knowing that you're all in the money. And you got your stop set back to your zero price. Todd, do you have more thoughts there?
Yeah, since you did bring up the money management question, a couple of questions just popped in that are quite interesting. And one, basically, do you use money management as basically a percentage of equity as a rule? Like, do you only risk, for example, you 2% of your account on any one trade or something like that?
Actually, that was actually a question that was in my Excel spreadsheet that I don't believe we ever got to. So it's probably I'm sorry for the person that asked that. I apologize to those of you that asked all those great questions. It kind of looks like half the group wanted to go through those questions, half the group didn't want to. There were some great questions in there. We were getting to some more goodies, and we kind of got distracted or taken away from that. But so the 2% question, no, I do not have a finite rule like that. I would encourage you to recall back when I showed you my actual trades. Some of my trades, went ahead and I was firing off onesies and twosies at first. Some of my trades I start firing off fivesies and tensies. And then as far as what my overall what I'll dump into there, I do not go ahead and limit it to the percent. I'm a seasoned trader. I'm a veteran trader. I limit it to what I feel I'm comfortable with at the time. I do not have a hard and fast rule, and I know people in this business, especially new traders, love to live by a hard and fast rule. And I would say this: for a new trader, you probably should significantly limit the amount of capital that you risk. Not that all of us shouldn't do that, but a new trader who's, of course, making a lot of errors, technical errors, who's finding their way and getting sucked into a lot of the emotional trades. The people that are going in shorting, and going ahead and then not able to manage it when they get into the short. I was able to go and make money on this, trade, because I knew what I was doing, and I knew where the support and resistance levels were, and I knew where to add more size so that when it pulled back, I would walk away a winner on this trade. A new trader is not going to know how to do that, and more than likely, in my opinion, unless their financial advisors very well prepared them. But so my comment to you, to the person asking it, who that 2% thing was actually what was mentioned earlier, so I'm assuming it's the same person, is 1 or 2%. I would certainly, as a new trader, consider limiting your losses to a much lower number like that. Brokerage houses will do that for you automatically, frankly. Most brokerage houses will limit you anywhere from 25 to 75% of your portfolio, intraday loss limits and stuff like that. I certainly know Infinity does, as they should, minimize the risk for the trader if the trader can't help themselves. But yeah, as a newer trader, I would strongly encourage you to consider lower percent trades. Yes, you're going to make less money, but you know what? If you're a newer trader, you're more likely to lose less money as well. Todd?
Looks like that's about it. A few questions are trickling in, but I think they are. We do have one more fish hook question. So let me go over this here. Can Robert give us his exact parameters when setting up the 3 charts for fish hook, the line chart, RSI, and candlestick, including time frame to view and all other exacts? So I think that question has been answered in your speaking. I think when they reviewed the chart or the the webinar, they'll be able to get all those answers.
Yeah, but as a courtesy, I'll take the 30 seconds just to go ahead, and I'll make this real quick. Just remember, all you're looking at, everybody, is you're looking at, Todd, we got to understand, I know there's a language barrier for probably at least, as I recall, roughly 10 of the participants today. It may not be necessarily their first language, so I want to be respectful of them as well. Just understand, this is a 15-minute chart. Okay, so it's a candlestick chart, 15 minutes of the S&P E-mini 500 contract, and then this is a standard 21-period RSI. It's not smooth. It's not manipulated in any way. It's a traditional 21-period, moving average. Okay, so just keep that in mind. That's all there is to it, and all you do then is convert it from a bar chart, or a candlestick chart. I've gotten good enough where I can see it, where I don't need to go ahead and obviously over years looking at these things need to convert them to bar charts. But for you, to help you as new learners of this technique, convert it to a bar chart. Voila, instant fishhook. Okay, so I hope that helps. Todd?
Yeah, a couple of questions that have come up are about speed lines and basically the significance of speed lines and how often do you rely on them to trade?
Oh, well, okay, great question. The speed lines, frankly, I rely on quite a bit. There's a couple things I'm looking at with the speed lines. I'm looking at is the, for instance, is the blue line above the magenta. I'm looking at are the speed lines above the 20-period moving average. Okay, those are some indications of some strength in the S&Ps. Okay, I'm looking for how snug these are trading along this line. That's an indication of more strength. If the market keeps slugging back all the way to the 20-period moving average, that can be a sign of a little less energy than I may like for a larger position trade. But if we're moving so fast that we're barely keeping up with the speed lines, that's why I kind of named them speed lines. Is that it's a more powerful. The market's not pulling back. It's not pulling back. It's not pulling back. You see, after it does that for a couple of hours, an overnight trade, then it finally gets tired enough where it breaks to the second level of support, which is the 20-period moving average. So the significance of them to me is strength of trend indication, and their relation to the very important or all important 20-period moving average that I've shared with you several times. Todd, sorry.
Yes, you've had a couple questions about do you use market versus limit orders and trailing stops?
Okay, trailing stops, yes, I do go ahead and occasionally use trailing stops. Not that often, though, because I'm very active with my money management. Okay, what you got to put in perspective here is you guys saw that trade there with just like the 85 contracts. You saw a couple of the 30-some contracts and so on and so forth. Okay, you got to understand, which is one of the reasons why, and I guess I need to have everybody remember that. I opened up that free chat room to go ahead and have people come there and contribute and help each other. I've got the private chat room now so that you guys can help each other more now that you've been given some additional training here on some very important techniques to look at, and now you guys as a community can go ahead and start looking at those things with training together. I try to participate when I can, but I go ahead, and there's a point to all this, and I go ahead and I very actively manage my money, which is why I'm not sitting there in that chat room. You guys got to keep in mind, I haven't been in a chat room since the mid-late 90s, because I'm sitting there managing my money. I don't have time to chat. How these people on these different chat boards talk all day and stuff like that is beyond me. Maybe it's because if you're trading smaller size, you can do it. I can't personally do it when I'm trading the size I trade. Now, with that being said, the point then, bringing it back full circle, so understand why I don't talk in the channel all day long. That's the first thing I want to, I guess the important point. The second important point is as it relates to trailing stops, I go ahead and I move my stops myself. Personally, I keep very close tabs and very close feel on my trades, okay? If you have to step away from your computer uh, after you've entered a trade, then by all means go ahead and use a trailing stop. The Infinity platform does a great job of trailing stop stuff for you. They got all those bells and whistles and stuff. Me, I very manually move that money around and those stops around as I'm in a trade. Okay. Now, to the second part of that, do I enter market order or limit? Whew, 99% of the time, it's limit order. Okay, it's not market order. Okay, very seldom. I'm trying to think the last time I entered a market order, for instance. Because I want you to think about that concept for just a minute. If you're entering a market order, there's a strong possibility that you're entering that trade because you're just dying to get in at any cost. If you're dying to get in at any cost on a particular trade, maybe that trade is not the trade. Maybe you're being sucked in with the emotion that everybody else is having. I like to make very cool, calculated trades. I'm dumping in there. You can only imagine when I'm dumping in, 50, 100 plus contracts, I need to be very cool and calculated. Just keep that in perspective that I like to see people, I like to personally use limit orders. Because I'm very methodical, I'm very structured. I'm saying to myself, I believe the price is going to get to here. Here's the price. I feel that I have value, and so on and so forth. So I'm keeping in the game versus, oh, it's moving. I got to go ahead and get in at any cost. Market order, market order. You see what I'm saying? There's a difference there, and there's a little bit of difference in psychology. Have I missed a trade for doing that? Yes, I've missed a trade for doing that. Do I regret missing those trades? Nope, because as I've told each and every one of you in my YouTube videos, the next trade with the S&Ps are just around the corner. There's always going to be that next trade and that next opportunity to make money. So if I miss a trade because I wasn't too ambitious or pushy to force in with a market order that could fill me at any price, especially with my size, or take advantage of me even as a small trader, take advantage of your fill. I'll pass and I'll be happy with my limit orders. Todd?
Yes, another question that's been asked a few times right now is basically how do you set up a speed line or speed lines? What is the format for that? And a question that goes with that is do you use them as signals to get in and out of trades specifically?
Yeah, so what I'm hearing is this is somebody who didn't attend my indicator class last week that was given all that information.
Exactly, that's what I was thinking.
Shame on you. I want the name of that person in my email box.
Oh, I got a red line right on him right now.
Wow. Wow. Okay. Somebody's going to be hearing from me. Oh, well, let's see here.
Would you like to defer that to an open webinar session, since that will be open to all sorts of questions, or do you want to do a courtesy since two different people actually asked that question?
Two people asked that question.
Two different people did.
You know what?
Because I'm pretty sure it's that 3 and 5 special moving average that you said.
Yeah. So let's go ahead and I tell you what. I'll go ahead and I'll share that here. To all of you who attended the indicator class first, I hope you're not going to stone me. I will go ahead and share these speed lines. I think they're important to the methodology of stops and entries and exits. So under that pretense, I'm going to go ahead and share the speed lines. So please don't be upset with me as far as you that attended last week. So with that being said, let me go ahead and give you the parameters on those two charts. Or those two bars, I should say. They are the 3 and 5 period simple moving averages, and they are the high, low, divided by the close. The high, low, and close divided by 3. Okay, so it's a 3 period and 5 period simple moving average, which is comprised of the high, the low, and the close divided by 3. Okay, that's how they're determined. So do I go ahead and specifically enter trades with them? And I certainly enter trades with them in mind, yes, because when I get the 2-bar strategy, the 2-bar setup strategy, if for instance, like right here, we have 2 crashing down bars. When we get a retracement, many times we'll get that retracement right to a speed line. So I will look at, in this case, taking a short near that speed line, or vice versa, a long side trade. I would look at going ahead and potentially taking a long side trade, next to the speed line. So just understand that the markets will pull back to those speed lines. If we've had the 2 consecutive bar break, I might look to be a buyer in that area or a seller in that area. So will I take entries based on the speed lines? The short answer is absolutely. Okay. Todd? I want those. I want those names after this webinar.
I don't know. I do have a nice general question from Joe. Is what percent success rate do you have in the 2-bar trade? Basically, 2-bar setups.
Well, I mean, frankly, my success ratio, like I said, because of the scale-in strategies I use, you know what I would do? I would defer this question. Gaydon in our channel, is this Joe O'Connor that asked the question? Todd?
Well, I think it was another Joe, and I just answered him, so his name disappeared.
Oh, okay. Well, what I want to say was Gaydon did some back testing. I don't like back testing, but I'll say this. I don't remember the last time I lost on the 2-bar trade. Okay, it's been some time, and compared to again, the 2-bar trade combined with my scale-in strategy, for me has proven very powerful. Okay, I can't emphasize that enough. It's the 2 things combined, because if you're always sitting there waiting for the perfect 2-bar setup, as you see, it could sometimes take a couple of days for the next one to set itself up for the perfect 2-bar high volume thrust, 1-bar light volume pullback. It could take a couple of days potentially to set up. Now, is that a bad thing? No, not necessarily, frankly, because based on the reckless nature of some traders, I think for them to get more disciplined and back off a little bit and take the time to wait for a proper setup may not be a bad idea, frankly, being brutally honest about it. You guys know I tell it like it is. But at the same time, you take that 2-bar strategy and then enter on the 3rd bar kind of along the lines I showed you a couple hours ago, and then combine it with a sensible scale-in strategy in the proper direction of the trend. It becomes far more powerful. I would encourage everybody who has never participated in a scale-in strategy before, get yourself on a simulator and try it. And see if you can learn something from that strategy before you go ahead and use real money. All I'm going to tell you is you guys just saw my real trading statement from yesterday, okay? And I made real money, okay? And I make real money on it, every day. So, there's a lot of opportunity to learn from that strategy. So Infinity offers free simulators. There's plenty of companies that offer free simulators, I believe. Do yourself a favor. You don't have to commit to Infinity or anybody else. But try that strategy on a simulator and see how it works, or paper trade it. That's what I did in the early 90s. When I was going ahead and trading, I didn't even have, all the electronic gizmos. I was doing everything, hand charting and everything else. So I would encourage you to think about that. Todd?
I'm sorry, I'm typing, so I don't want you to hear all the typing, the chatter.
Oh, okay.
As far as going back to the fishhook question, this is as far as getting out of the trade. Once you enter in on a fishhook, do you then rely on your support and resistance levels to close your positions, or do you have like a set target
Nope.
number of ticks or something?
Nope. It's based on my support and resistance levels, absolutely. As you hopefully gained the theme from this today, many of my exit strategies are based on support and resistance levels. So it's the same thing. Where's that next support or resistance level, and how much am I going to take off the table at that level? So in this case, the fish hook could yield 1 point. It could yield 5 points. Many times what the fishhook will do will run to the next support or resistance level. So, take a look at that yourself as you're learning that this afternoon, and get a feel for it. But no, it definitely, I rely more heavily on my support resistance levels versus a set, okay, fishhook, guaranteed profit of X points. Oh, hey, Todd.
Okay. Yes.
Todd, just as a
Yes.
thing, we're rapidly approaching 3:30 or 12:30, so we're actually longer than the first webinar. So
a lot of good
let me
questions.
ask a question to everybody, because I mean, obviously I've gone an hour and a half over what I originally was going to, but I've tried to give you guys a lot of information. You can only imagine what this would have been like, if this was a typical guru session and cut to 2 hours. I mean, how much would people learn? Can I get a show of hands? Can people demonstrate to me and show me that they've learned some things today? Could everybody who's learned something today please raise their hands and found this to be valuable for you? And just go ahead and keep them up if you would, please. Okay, great. Thank you. I appreciate that. So, why don't we, Ty, can you take a look at a couple of the key questions there? And while I still have a voice, I want to be able to go ahead and answer, a couple more things if I can.
No, I think for the most part you've answered all the questions. Some are a lot of, some people are going back onto the indicators questions, onesie twosie questions, and I didn't know if you want to just defer that to maybe the private chat room or not.
Yeah, well, because they'll be able to learn a lot more about that between the people that participated last week and the joint group discussion amongst everybody. You'll be there. Robert will be there. I mean, it can be. There's going to be plenty of people there that can help. That's what that channel was created for. It's kind of an ongoing support mechanism.
Yeah, I think that's a good point.
I mean, I put that there for free. I mean, let me be honest about it. Sometimes I think some people kind of, don't understand what they've got here. Because as you can see, I make real trades, I make real money. I don't need other people's money. I didn't open up that secondary chat room. I could, like so many people, could have just been like, okay, you come here and then you just pay me X number of hundreds of dollars a month to go into that chat room. I made that a free chat room for people as a home and stuff like that. I've tried to give away an awful lot of stuff for low cost or no cost, and I hope that everybody sees that and understands that and appreciates what we're trying to do as a company and as individuals. For all of you that are here today, Todd and Robert, Fletch, those guys have donated their time to be here. They've learned a lot along the way, but they've also tried to help you guys too. I've certainly tried to donate a lot of my time as well. So I hope that everybody's learning and taking away some positive things from here today, and and appreciating the fact that you're getting to see my real trading ideas and strategies and tactics, and I hope that's of benefit for you. So,
Robert,
yes.
if I can interject here, we're getting just a slew of compliments right now. Everybody's thanking you left and right, and it's just everybody here. So
I appreciate that.
No one is. I'm not seeing any negative comments or anybody's upset about not getting a particular question answered. So that's not to worry.
Okay. I just want to make sure, we're trying to help as many people as we possibly can. So, I obviously, my son, I only have so many, so many hours in the day, but you guys know I try to give you guys as much as I can, and we will continue to do that as a company, as powercharting.com. It's been my vision. Obviously, I really care about you guys as people, and I try to be there for you. So, with that said, Todd and Robert, thank you for being here for these guys today, because I couldn't have done this without you. Answering these questions. 'Cause I'm focusing on my screens and not the actual questions and comments. It's just not possible to do. So I appreciate you guys being here. I'm sure everybody in this room thanks you guys. I certainly do. So from me to you, in front of everybody, and Joe O'Connor, thank you for all the great things you've done and you did with last weekend's webinar. Joe, just a great supporter from the United Kingdom, awesome guy. A lot of great people here that make this a great community, and that's why I said I hope that each and every one of you that's learned from this today will help each other in that private chat room, and then still continue to contribute on an individual basis in the public chat room, just kind of posting your trades and helping people in general format, but certainly helping your friends and colleagues in the private chat room, starting hopefully as soon as Monday. We'll be emailing the password out to everybody. So please go ahead and think about that too. We've tried to help you, and I hope that you'll continue to help your friends and colleagues. There's plenty of money to go ahead and be made by all of us. We don't have to go ahead and be worried about, if I can take time to share my real things, despite the size that I trade, I hope that you guys will find it in your hearts to help each other out, as well. So that would be my closing comments, Todd, unless you have something for me, sir.
No, I just want to again compliment you on a great webinar, and I know everybody's looking forward to seeing some more in the future and talking to you in the chat rooms.
Great. Well, with that being said, thank you all for being here on your Saturday. I look forward to seeing each and every one of you Monday, talking to you through the emails and all the other great ways we've been able to communicate, such as this. Many of you I know I'll be seeing again next week. I look forward to that. The open sessions, bring those questions. I'll probably solicit some in advance just so that I get an idea so I can really put some presentation together for you. But I'm looking forward to that, and just looking forward to our ongoing relationship. I've told you that this is a relationship for the future. This isn't these one-hit wonder things where you come to my $10,000 class and you never hear from me again. This is a relationship for the long term. So thank you for all taking the time to be here. And with that said, I wish you all a great Saturday, a great weekend, and looking forward to seeing each and every one of you on Monday. Take care, everyone.
Muted.